Today we earnestly and sincerely intend to be on time for the sessions. Yesterday there was quite a cascading effect on the other sessions, and we had to curtail the sessions from 45 minutes to 30 minutes. Today we'll try to be in time for the sessions, and towards that we solicit your support. So once again, a request to everyone, people who've joined us, to be kindly taking your seats, kindly be leaving the spaces unoccupied as our distinguished guests of honor are going to be joining us. There is a meeting which is on with the chairman IRDI right now, and after that closed door meeting, we'll have all of them joining us for the inaugural session. Till that time, let us be just ready to be welcoming our distinguished guest of honor and welcoming this day of active discussions and deliberations aiming for a progressive future. Thank you. The panel discussions to our panelists are going to be taken from the app. The questions which you are going to be sending on the app, for that you are requested to kindly download the QR code. You have that the small standee on your tables. Please download the QR code, and session-wise, you are requested to kindly extend the questions for our panelists. Only those questions are going to be taken which are through the app. Chairman IRDI, Shri Ajay Sethji. Let's extend a warm welcome to Shri Ajay Sethji as he joins us in the gathering. So good morning to everyone once again. Namaskar. May I request everyone to please settle down. We already have our distinguished guests of honor for the inaugural session having joined us. आप सभी से निवेदन है अपना स्थान ग्रहण करने के लिए. Requesting everyone to be kindly taking your seats, please. So namaskar to all of you once again and welcome to the day 2 of the 2-day conference being organized by the Insurance Brokers Association of India on this very momentous occasion and the milestone event for IBAI as we celebrate the 25 years of establishment, 25 years of IBAI in nation building. And ladies and gentlemen, the theme which we have for it, as we discussed yesterday also, it not only reflects, but it echoes the very purpose, the very vision of our industry, Bimit Bharat, Surakshit Bharat, with a shared vision of insurance for all by 2047. A theme, ladies and gentlemen, which brings us all together towards aligning our purpose with the larger parikalpana of Viksit Bharat given by our Honorable Prime Minister. And yesterday towards it, we had our sessions on rural insurance, health insurance, on the emerging technologies like AI. We touched on InsurTech. We discussed with the legal experts, with the global experts from WFII, from Gift City, and further addressal of disputes. And today we continue with this momentum created yesterday. And in all the discussions, the core message which came out yesterday was that insurance for all is not just about policy sales, increasing your policy sales, but it is about outreach with a purpose. And as we now move to day 2, the spotlight, ladies and gentlemen, is on the policies, on regulations, on collaborations, and a way forward. And as we take this journey together towards shaping a more modern, efficient, sustainable, tech-savvy, future-ready insurance ecosystem, we are delighted, in fact, we are honored that we have leaders who have been architects of these transformational initiatives and whose views, whose vision are not only going to be enriching, insightful, but then they are going to be setting benchmarks as we move towards shaping a future-ready insurance ecosystem. So we begin, ladies and gentlemen, once again, as per the Indian tradition, by lighting the ceremonial lamp. And I would like to first invite our office bearers to be please joining us. Mr. Narendra Bharinwal, the President, Mr. Nirmal Bajaj, the Secretary, Mr. Ashok Jain, Treasurer, Mr. Kishan Lal Agarwal, Vice President, and Mr. S. Mohan, Vice President. And now our distinguished guest of honor, the Chairman IRDI, Shri Ajay Seth Ji, the Chairman IFSCA, Shri K. Rajaraman Ji, the Chairman General Insurance Council and the Managing Director and CEO, Bajaj General Insurance, Dr. Tapan Singhel, and Shrimati Girija Subramanian, Chairman and Managing Director of New India Assurance. आज के हमारे विशेष अतिथिगण आदरणीय श्री अजय सेठ जी, श्री के राजारमन जी, डॉक्टर तपन सिंघेल और श्रीमती गिरिजा सुब्रमण्यन, उनके कर कमलों द्वारा इस दीप प्रज्वलन के साथ हम आज के इस दूसरे दिन के कार्यक्रम को आरंभ करते हैं।
वक्रतुंड महाकाय सूर्यकोटि समप्रभा निर्विघ्नं कुरु मे देव सर्वकार्येषु सर्वदा।
With the President IBAI. और देवी सज्जनों, एक बार पुनः आप सभी की विशेष तालियों के बीच मंच पर स्वागत करते हैं चेयरमैन IRDI श्री अजय सेठ जी का, चेयरमैन IFSCA श्री के राजारमन, चेयरमैन जनरल इंश्योरेंस काउंसिल एंड मैनेजिंग डायरेक्टर एंड CEO बजाज जनरल इंश्योरेंस डॉक्टर तपन सिंघेल का, और साथ में हमारे प्रेसिडेंट IBAI श्री नरेंद्र भरिनवाल जी का। So, ladies and gentlemen, seated on the dais, we have our leaders who have been architects of these transformational initiatives of the today which we are seeing and celebrating. But then as we pave way for the future, we once again seek their guidance and their insights. So thanking each one of them for their presence here and being with us. And to welcome them and to welcome everyone and to further share the futuristic vision of IBAI, I would like to request and invite the President IBAI, Shri Narendra Bharindwalji, for his opening remarks.
Thank you. Good morning, everyone. Respected Chairman IRDA, Shri Ajay Sethji, respected Chairperson IFSCA, Shri K. Rajaramanji, Chairman GI Council, Dr. Tapan Singhal, Chairman GIC CMD, Shri Hitesh Joshi, Chairman New India, Madam Girja Subramaniam, Chairman Oriental, Shri Sanjay Joshi, Chairman United India, Shri Bhupesh Rahulji, Mr. Rakesh Jain, Amit Ganorkar ji, and other CEOs. If I left somebody's name, I sincerely apologize for that. So all the CEOs and CMDs from the private sector insurance company, welcome today. And past presidents, past office bearers, governing council members of IBAI, and my dear fellow members of IBAI, a very warm welcome to all of you. In addition to that, we have two international delegates with us, the Vice Chairman of WFII and Director WFII. Thank you very much for being here today with us. Ladies and gentlemen, it's my privilege and honor on behalf of Insurance Broker Association of India to welcome all of you to the second day of our Silver Jubilee celebrations. Today, it's not merely the celebration of 25 years of an association. It is the celebration of 25 years of trust, professionalism, partnership, and unwavering commitment towards strengthening India's insurance ecosystem. 25 years ago, a group of visionary leaders laid the foundation of IBAI with the objective of creating a unified voice for insurance brokers while also keeping the interests of policyholders and the orderly growth of insurance sector at the heart of our mission. As we celebrate this remarkable milestone, we bow our heads in gratitude to every founder, every past president, every honorary secretary, governing board member, and every member who contributed to this extraordinary journey. I extend a warm and respectful welcome to our Honorable Chairman IRDI, whose visionary leadership is guiding the insurance sector through a transformative phase of reforms. Welcome, sir. We are also equally privileged by the gracious presence of Honorable Chairperson IFSCA, whose leadership is positioning Gift City as a global financial and reinsurance hub. Welcome, Mr. Rajaraman. I also have the privilege of extending a warm welcome to Chairman GI Council, Dr. Tapan Singhal, sir. Thank you for being with us. And also extend my respectful greetings to all distinguished CMDs, CEOs, and our insurance companies, reinsurers, TPAs, industry body, international delegates, and every stakeholder present today. Your presence reflects the strength of our shared commitment to building a stronger, more inclusive, and globally respected insurance industry. Friends, the journey of IBAI has always been much larger than representing insurance brokers. It has been a journey of building institutions, strengthening professionalism, and supporting regulatory reforms and protecting the interests of policyholders. For 25 years, IBAI has worked as a constructive partner of the authority and the industry. Whenever reforms were introduced, we educated our members. Whenever policyholders needed better solutions, we encouraged higher professional standards. Whenever the industry faced challenges, we attempted to contribute constructive and practical suggestions. Dialogue, collaboration, and mutual respect has always been the guiding principles of our association. Over the years, IBAI has invested significantly in knowledge creation. Our claims handbook has become a respected technical reference for brokers and insurers. Our iBroker magazine has emerged as a platform for thought leadership and policy dialogue. And today, as we launch our compliance SOP manual, which will assist members in understanding and implementing evolving regulatory requirements. Through our knowledge series, webinars, workshops, and continuous professional development programs, thousands of insurance professionals have enhanced their technical knowledge and regulatory understanding. These initiatives have not merely strengthened brokers, they have strengthened the entire insurance ecosystem. Knowledge is perhaps the strongest form of consumer protection. Friends, insurance broking today represents one of India's finest knowledge-based entrepreneurial opportunities. This profession is built not on factories or machinery, but on knowledge, integrity, advice, and trust. Over the last 2 decades, hundreds of first-generation entrepreneurs have embraced this profession and built institutions that today serve individuals, MSMEs, corporates, infrastructure projects, and government programs across the country. Our member firms have made significant investments in technology, digital infrastructure, cybersecurity, analytics, and customer service platforms, enabling insurance solutions to reach customers faster, more efficiently, and right up to the last mile. Equally significant has been our investment in people. Insurance brokers continuously educate and train employees, relationship managers, point of sales persons, broker qualified persons, creating a skilled insurance workforce for the country. Through these efforts, our fraternity is creating employment, encouraging entrepreneurship, supporting local economies, and helping arrest migration of labor by creating meaningful livelihood opportunities closer to people's homes. Most importantly, our members are continuously spreading insurance awareness and contributing towards deeper insurance penetration across Bharat. The contribution of insurer broker extends far beyond policy placement. Members of our fraternity invest enormous effort in educating customers, understanding their risk, structuring appropriate insurance programs, assisting in policy issuance, servicing policy throughout their tenure, and standing shoulder to shoulder with the policyholder during claims. Our relationship with the customer does not begin with a quotation nor end with issuance of a policy. We remain trusted partners throughout the entire insurance journey. This continuous engagement has strengthened confidence in insurance and improved customer outcomes across the country. Respected Chairman, sir, many organizations within our fraternity have also made meaningful contribution towards product innovation and product development by bringing practical market insights and experience and customer insights to insurers and the regulator. The evolution of several insurance products bear testimony to this collaborative effort. The motor insurance policy, as it exists today with several customer-friendly improvements, owes much to the practical suggestions and continuous engagement of insurance broking fraternity. This collaborative approach between insurers, brokers, and authority has significantly benefited Indian policyholders. Friends, India today stands at the threshold of extraordinary insurance journey. The vision of insurance for all by 2047 has given all of us a common national purpose. Government alone cannot achieve this vision. The regulator alone cannot achieve it. Insurance companies alone cannot achieve it, nor can brokers alone. It requires partnership, it requires trust, it requires collaboration. Above all, it requires keeping the policyholder at the center of every decision. Respected Chairman, sir, I would like to place on record the sincere gratitude from entire insurance broking fraternity for the authority's landmark decision to introduce a perpetual license regime for insurance brokers. This is a historic reform and a significant milestone in enhancing ease of doing business, reflecting the authority's confidence in a mature, compliant, and a more professionally governed insurance broking ecosystem. On behalf of the entire broking company, I respectfully convey my heartfelt thanks to Chairman Members Authority for the team and IRDA for progressive reforms. Sir, we respectfully place few submissions before the authority. Our request is not for lesser regulation. Our request is for better regulation, smart, proportionate, and risk-based regulation. As compliance expectations continues to evolve in areas such as cybersecurity, data protection, and governance, we respectfully submit that risk-based compliance architecture would help smaller and mid-sized brokerage firms meet regulatory expectations while continuing to serve policyholders effectively. The objective of compliance should remain common for all, while the pathway may appropriately reflect the scale and complexity of operations. Friends, as we look forward to the future, our subject deserves our collective attention. One subject deserves collective attention. That is sustainability. Sustainability is not merely about the environment. It's for our industry. Sustainability means financial resilience, responsible underwriting, climate preparedness, ethical governance, digital resilience, and long-term protection of policyholders. Insurance is fundamentally a promise made for the future. Therefore, sustainability must remain central to every decision we take. Insurance brokers today are increasingly serving as trusted advisors, helping businesses and individuals understand emerging risks, improve resilience, and adopt responsible risk management practices. A sustainable insurance market benefits policyholders, insurers, intermediaries, investors, and society alike. Technology is rapidly transforming our profession. Artificial intelligence, embedded insurance, predictive analytics, and digital platforms are redefining customer expectations. Yet, one thing will never change. Technology can automate transactions. Technology can analyze data, but only trusted professionals can build enduring relationships. That trust remains our greatest strength. As president of IBAI, I assure the authority and every stakeholder present here that our association will continue to remain a constructive partners in India's insurance journey. We shall continue supporting reforms. We shall continue strengthening compliance. We shall continue investing in education and professional excellence. We shall continue encouraging innovation. And above all, we shall continue protecting the interest of policyholders. Because insurance brokers are not merely distributors of insurance products. We are creators of insurance awareness. We are trusted risk advisors. We are architects of financial resilience, and we are partners in nation building. Before I conclude, I once again express my deepest gratitude to Honorable Chairman IRDI, Honorable Chairperson IFSCA, Chairman GI Council, all CMDs and CEOs of our insurance companies, reinsurers, industry partners, sponsors, international delegates, and every member of IBI family for making the Silver Jubilee truly memorable. 25 years is a proud milestone, but I firmly believe our finest years are still ahead. Let history record that this Silver Jubilee was not merely a celebration of our past, but the beginning of a new era of partnership between the regulator, insurer, intermediaries, and every stakeholder committed to building a stronger insurance ecosystem for India. Together, let us realize the vision of Bimit Bharat, Surakshit Bharat, contribute meaningfully towards insurance for all by 2047, and by playing our part in building Viksit Bharat. Respected Chairman, sir, I seek your permission to conclude with a sentiment that comes from the heart of every insurance broker in India. IRDAI is our guiding institution. We look upon our regulator as our parent. Hindi mein apne bolte na, mai baap hai IRDAI hamara. From a father, we seek the discipline that builds strong institution. From mother, we seek affection, compassion, and nurturing that enable every stakeholder to grow responsibly while always protecting the interest of policyholder. With your guidance, we are confident that together we shall build an insurance sector that is stronger, more resilient, more inclusive, and globally admired. Thank you very much.
Thank you very much, sir, for your very defining address that reflected the kal, aaj aur kal of the insurance sector, the collective voice and the expression of each and every member of IBI. Thank you very much, sir. And ladies and gentlemen, as the President mentioned, these 25 years is not just about a milestone. In fact, it is a legacy which has been built on trust, on professionalism, on knowledge, on partnership, and then keeping the interest of the policyholder at the core, at the heart of every decision. So we now take you through this remarkable journey of 25 years through a specially curated film, and to present that and to talk more on this, I would like to invite Secretary IBI, Shri Nirmal Bajaj ji.
Namaste and happy morning to each one of you. Respected IRDAI Chairman Sri Ajay Seth ji, IFCA Chairman Sri K. Rajaramanji, GI Council Chairman Dr. Sri Tapan Singhal, other dignitaries on the dais, off the dais, industry leaders, my fellow members of IBAI, and ladies and gentlemen. As we celebrate, as the President had pointed out, as we celebrate the Silver Jubilee of Insurance Broking Association of India, it's my privilege to present this commemorative film capturing our 25 years journey of growth, service, and contribution to the Indian insurance sector. This is a humble tribute to our founders, past leaders, members, regulators, insurers, and all stakeholders who have been part and parcel of this remarkable journey. We have tried to reach out to most of the people who have played important role in this journey. And I would like to convey my heartful gratitude and thanks to each one of them who spared their valuable time and insights for creating this film. This film is being released in parts. It's a comparatively longer film. So, in multiple part of 4-5 minutes. Here we will release the first part of the film. Other parts will be released during the day. May I request our AV team to please show the film. May I request your attention on the screen, please.
"25 years ago, an idea was born, radical, necessary, long overdue. An idea that shaped an industry, a community that came together with one shared purpose: to strengthen the profession of insurance broking in India. Today, as we celebrate IBAI's Silver Jubilee, we celebrate far more than the journey of an association. We celebrate the evolution of a profession that found its voice, earned its place, and today plays a defining role in India's insurance ecosystem. But every milestone has a beginning, and every journey begins with one question: how did we get here? When insurance broking was introduced in India, the profession was still finding its identity. Many viewed brokers as insurance agents, yet their role was fundamentally different. An agent represented an insurer, the broker represented the client. That distinction changed everything. As the industry evolved, brokers needed a common platform, one that could represent their interests, encourage professional excellence, and engage with the regulators to build a stronger ecosystem. That vision led to the formation of the Insurance Brokers Association of India in 2001. IBAI continued to unite professionals under one shared purpose: raising standards, encouraging collaboration, and strengthening trust in the profession.
My best wishes to IBAI for its Silver Jubilee celebrations and for many more years of dedicated service to the insurance industry and generally to the people of India. Thank you, and my very best wishes to all of you present here.
Look at the length and breadth of the country, the number of insurance portals that has opened. That has played a big role in spreading insurance. Portal by brokers, insurance companies, small branches of insurance companies across the country. So, all these things are coming out for spreading the insurance for all, the message.
Celebrations. And I must say that in the last 2 years, the broker channel share in the insurance sector has risen from 36 to 40%. And this itself shows how the broking, the share of broking in the entire case has gone up compared to the other channels. And this growth, I think, has been fueled by improvement in technology, by economic expansion, regulatory reforms, and increased risk awareness, and new insurers being present on the scene and wider distribution also.
Looking at innovations, bringing best of global practices, looking at the Indian scenario, seeing what best can be done to enhance a business further, putting that together. Now, the contribution of the Working Association and the brokers, in particular, spread across the different categories of brokers, has been immense in terms of serving the nation.
बंधुओं नमस्कार, ये मेरा सौभाग्य है कि मैं आप सबसे साक्षात आज मिल रहा हूं। मैं इसके लिए इंश्योरेंस ब्रोकर्स एसोसिएशन ऑफ इंडिया को धन्यवाद देता हूं कि मुझे ये अवसर प्रदान किया।
Publications like the Claims Handbook became valuable reference points for the industry, helping bring greater consistency and understanding to claims management. Initiatives like Brokers Voice and Brokers Connect encourage dialogue and shared experiences, creating a stronger sense of community among members.
From the perspective of the National Insurance Academy, we've been observing the growth of the insurance industry since the formation of the IBAI, and for the last 25-26 years, when all these concepts of broking and other things they came into place, we have observed there is tremendous growth.
My apologies for some technical hitch. Rest parts will follow. Thank you.
बहुत बहुत धन्यवाद सर। और अब देवी सजनों, अतीत की उपलब्धियों से प्रेरणा लेते हुए समय है एक नई भारत को लिखने का, and towards that we seek the guidance and the margdarshan of our leaders. May I first request Shri K. Rajaraman, IFSCA Chairman of International Financial Services Centers Authority, who has been instrumental in positioning GIFT IFSC as a global competitive financial hub.
Mr. Ajay Seth, Chairman IRDA, Mr. Barindwal, and Mr. Singhel from the council and from the association, and distinguished guests who are here from India and from rest of the world. First of all, a very warm welcome to all of you and good morning. So I would like to first of all congratulate the IBAI for marking the 25 years of service to Indian policyholders. Your journey has been very eventful, and you've played a very important role in the development of the industry and also the overall welfare of the citizens of this country as well. So, a Silver Jubilee movement is always a time to look both ways at once. I mean, back at the distance traveled, and also looking forward to the distance still to cover. So, IBAI's journey began in 2001. At a time when insurance broking in India was itself a fledgling profession, finding its feet within a newly open sector. 25 years on, IBAI stands as the sole IRDA recognized body, representative body of licensed insurance brokers in the country. And with a membership that has grown many times over, the growth itself not being incidental. It reflects the trust that the brokers have earned transaction by transaction, claim by claim, as honest intermediaries standing on the side of the policyholder. On behalf of the International Financial Services Centers Authority, let me extend my warmest congratulations to the entire IBA fraternity on this milestone. IBA has also opened its chapter in GIFT City very recently, which reflects the commitment it shoulders. I bring greetings today not only as a well-wisher, but also a regulatory partner from a somewhat rather younger regulatory institution. So the International Financial Services Centers Authority was conceptualized, some decades ago, but actually what is given effect to through some executive orders in 2014. But effectively came into existence as a legal institution sometime in 2019, thanks to an act of parliament called the International Financial Services Centers Authority Act. So what it did was to create a new jurisdiction, which is a special economic zone in the western state of Gujarat, in a place called Gandhinagar. So there is a small special economic zone called the GIFT City. So this is recognized as an offshore jurisdiction within India's territorial jurisdiction. So what the government did was to create a foreign offshore jurisdiction within India by providing certain special dispensations. So the first one is to create a new act of parliament, creating an authority which would govern which would regulate the markets there. So the IFSCA Act created a new regulator called the IFSC Authority, and endowed it with the powers to notify new regulations under the 16 financial sector laws of India. So, in effect, I think the IFSC Authority has rolled into one the functions of the Reserve Bank of India, the IRDA, the Stock Exchange Board of India, the Pension Fund Regulatory Development Authority, and other regulators as well in the financial sector. So this, the powers of the IFSC Authority extend to all the major domains, which include banking, insurance, pensions, and the stock markets. So in the last 5 years, since 2020, when the authority became operational, the authority has notified nearly about 35 regulations covering banking, insurance, stock markets, and the pension and a variety of other sectors. So IFSC Authority has also extended its ambit to a few other sectors, thanks to the provisions made in the respective acts of the Government of India. So there are a number of related things that we do, other than these major 4 domains. So in the last 5 years, if you look at it from a jurisdiction perspective, it's very important to understand, I think, where we stand, because this is being an offshore jurisdiction. What the Government of India did also was to declare businesses set up in the IFSC Authority, in the IFSC, as offshore business, non-resident, under the FEMA. I think there is a Foreign Exchange Management Act of India, under which I think this jurisdiction has been carved out, and therefore any business set up here would be a non-resident under the FEMA. So which means that the jurisdiction is not allowed to transact in the rupee. All the businesses are done in foreign exchange, I think. So there are 15 specified currencies under which this jurisdiction allows businesses to operate. So which include all the freely convertible currencies of the world. So in the last 5 years, there are more than about 40 banks which have set up operations here, and they have international banking units which provide FX-denominated products, which are basically loan products, I think the other financial services products such as derivatives, and so on and so forth. So in the total assets of the banks, in the 40 banks put together, is nearly about $120 billion. And the main the lending into India in terms of FX largely happens through IFSC now, to the extent that almost 40% of the India's ECB external commercial borrowings happens through GIFT City. There is also an insurance industry, and I think our focus is largely on to complement the Indian market. So just to give you the business sense of IFSC, let me also say that what IFSC does is to supplement, complement, and support the Indian market. That is our primary function. So the focus of the insurance industry in IFSC is to provide a reinsurance support to the Indian market. So we want to be a reinsurance hub, and as on date, nearly about 25 reinsurance companies have set up operations there. They are all largely foreign insurance companies. But we also do the companies there also do insurance for people who are resident outside India, I think. So there are more than about 16 million non-resident Indians who live across the world. There are 19 million persons of Indian origin who also have abiding interests in India. So the insurance industry there provide all kinds of insurance products for this non-resident community as well. there is also a general insurance market which is focused on assets which are outside the country, like for instance, ships, aircrafts, maybe oil fields which are across the country, and many other possibilities. So the focus is to actually to complement, aid, assist, and support the Indian growth story. There is also a capital market segment, which is actually again a complement. I think the main products that are traded there are the dollar version of the Nifty 50 and the Sensex 30, which is the Indian stock index futures of the Indian stock markets. There are also there is a large fund industry as well. There are more than about 400 funds which have been set up by nearly 220 fund managers focused on venture capital, private equity, private debt, impact capital, and also there are many hedge funds as well. So the fund industry there caters to not only the foreign investors who pool their investments and want to invest into the Indian market, but also it also caters to non-resident Indians who want to manage their assets out of GIFT City as well. So they pool the assets there and then also invest into global markets as well. It also supports resident Indians into investing into global stock markets and as well. So I will say that to summarize the IFSCA's goal, initially though we began as an offshore center to actually to focus on how to attract many Indian businesses which went out of the country to come back. So the focus has now largely turned into an attempt to support and facilitate and aid and assist and accelerate the India growth story. The Honorable Prime Minister of India in 2022 envisioned the thought process of Viksit Bharat, which means the thinking about how India will become a developed nation by 2047. So a very ambitious and challenging task. So the thinking was how India can graduate from being an LMIC to a high-income country. So being a very large country, I think it takes a lot of heavy lifting. So this process will obviously require a lot of things. The government of India is doing a lot of things, which include, I'm sure that Mr. Ajay Seth will speak about it, being a former Secretary DEA. But I think amongst the many things that the government of India is doing is to actually revamp the legal and the regulatory architecture. And therefore, we are also busy in looking at how we can enhance the ease of doing business, make the cost of doing business lower, and so on and so forth. So we have set up a task force which is looking on ease of doing business, and the second report is almost getting ready, which is focused on the complete life cycle of a business and see how we can bring down the hassles and the friction that business faces when they go through the full life cycle from start to exit. So the focus of the government of India is largely on revamping the legal architecture, focused on the ease of doing business. The second most important vertical, if I may say, in 2047 agenda is to look at the investment agenda, how to garner investment for the India's growth story, in manufacturing and infrastructure and so on and so forth. And that's where GIFT City will play a very important role. So our platform is focused on how we can attract investors from all over the world to look at not only India, but also the region, and also pool capital in a manner that actually supports India's growth story. So, if I may give you some numbers, I think the GIFT City ecosystem today, as on date, has provided debt. The banks in GIFT City has provided debt of nearly about $61 billion to the Indian ecosystem. These are largely Indian corporates who borrow abroad. In addition to that, I think there are the fund industry there has managed to invest nearly about $14 billion into India. About nearly about $75 billion of capital have been pooled and syndicated through the GIFT City ecosystem for the Indian growth story. So that is just the beginning, because all this has happened in the last few years, and we believe that there is a great opportunity going forward as the country expands. Let me move to the insurance business in IFSC, because that's what we have gathered here. I think there are 72 registered insurance offices in IFSC, 38 insurance offices, 34 insurance intermediaries, which include reinsurers, brokers, etc., and also a few fintechs as well. Let me also say that the insurance intermediation, insurance broking in particular, sit at the very heart of the India growth story. As a regulatory framework for insurers and reinsurers is only useful as the distribution architecture, if the distribution architecture connects it to the real risk. So it is the brokers who understand the client's exposure, who structure the placement, who negotiate terms, and who ultimately give the framework its meaning for the market. So this is true for Mumbai, Delhi, as in GIFT City as well, and that's why IFSCA has built broking pathways which include composite brokers, corporate agents operating out of IFSC, and they are all complementary and not competing with the domestic broking ecosystem. And we are very happy that IBAI has been very ably supporting this exercise. Over the last year, IFSC has taken forward several initiatives that I believe are relevant to this audience. We are finalizing a framework for mutual insurers and protection and indemnity clubs, which will allow specialized mutual structures, long familiar for the shipping and the specialty markets internationally, for domicile in GIFT IFSC, because India has very large shipping ambitions. The Honorable Prime Minister of India launched the National Shipbuilding Mission last year, and the focus is on how to scale up the India's presence in the global fleets. So currently, I think India owns about 1.6% of the global fleet. We are 16% of the world's population, but I think we are playing far below the potential, and therefore there is an opportunity. So GIFT City supports through shipping and aviation leasing framework as well. So there are a number of large ship lessors and aircraft lessors also housed out of the IFSCA ecosystem. And the opportunity for launching P&I clubs exists once we are done with this regulation. We are also working on our insurance-linked securities framework, which will enable catastrophe bonds and other risk transfer instruments to be structured here. Because we are aware that other than the mainline reinsurance companies, there is also a large group of investors who are looking at the alternate risk transfer opportunities, and that this kind of regulations will enable that and participate in the large Indian market. So let me say that I will also endorse the vision of the domestic regulator, IRDA, which has envisioned the insurance for all agenda by 2047. And IFSCA is fully committed to supporting the domestic markets and the regulators' vision for insurance for all, with a penetration rate of 3.8% and the potential for scaling up the penetration to about 6-7% as in other developed jurisdictions. I think the opportunity for insurance and reinsurance is enormous. And I will say that the enabling of certain structures like the ILS structures and the MGA-led underwriting capacity will certainly support the building of onshore capacity in GIFT IFSC as well as in domestic jurisdiction as well. So as both our institutions, both IFSCA and IRDA, look ahead, the challenges facing Indian insurance are converging rather than diverging. Protection gaps remain wide, particularly in health and in small and medium enterprise segments. Climate risk is reshaping underwriting across property and agricultural lines. Technology is changing how policies are distributed, serviced, and claimed. And the aspiration shared by all the regulators and by the IBAI of extending meaningful insurance protection to every household will not be met by insurers or brokers or regulators acting alone. I think we all have to work together. So there is a need for a close, trust-based collaboration between industry and regulation that IBAI has modeled itself for a quarter of a century. So I would like to close with a word of appreciation for the individuals who built IBAI from its founding in 2001 into an institution that it is today. So associations are in the end built by people who give their time and investment to a cause larger than their own firm's balance sheet. That spirit of service to the profession and through the profession to the Indian policyholder is the IBAI's real Silver Jubilee achievement. On behalf of IFSCA, I wish IBAI a very happy Silver Jubilee, and I look forward to our institutions collaborating even more closely in the coming years ahead. But I also will end by saying that I also welcome IBAI and its members to use the GIFT IFSC ecosystem to serve the world. Export of financial services and financial technologies is a key focus, and I'm sure that this is the opportunity for the IBAI members. So we also welcome insurtech companies and other platforms from the IBAI community to test products and launch them for the global community, which includes NRIs and OCIs who live across the world. So we also welcome technology companies which build technology for the world on very rarefied areas such as actuarial modeling and so on and so forth. So with this, I'll close here and say once again, wish you all the very best and look forward to active collaboration. Jai Hind.
Thank you very much, sir, for your very insightful address and illuminating the immense opportunities that GIFT IFSC presents for India's insurance and reinsurance and reinsurance and also the technology ecosystem, and then expanding these global opportunities for the insurance broking fraternity, and once again reiterating and elucidating the role of greater collaborations between all the stakeholders. Thank you very much, sir. And since, ladies and gentlemen, we have Dr. Tapan Singhel, who's known as the insurance man of India, though he's going to be addressing us in the other session, in the next session. But then we would also like to invite his views and his insights. He, ladies and gentlemen, someone who has been, though a scientist by education, but as for his passion, he stands as an insurer. So may I request him to please address this gathering. A few words from him.
Thank you, ma'am. Thank you, ma'am. I think when you emphasized on few words, I got the hint. So, Mr. Seth, Mr. Radharaman, Mr. Narendra, I think we insurers pride ourselves as amazing salespeople, but listening to Mr. Rajaraman, I felt that the way he sold Gift City, and I've seen it internationally, wherever I go and meet any insurer brokers, they're all very curious about. I've looked at the plethora of things that he's putting together. Sitting there, get so tempted that we should immediately be there. I think, I really loved the entire presentation and the talk which was there. Now, having said that, if I look at IBAI, and if I look at Mr. Narendra and the team, and I've seen Sanjay and all the leaders which are sitting here, I think I have seen very active participation in terms of looking at what to do for the industry, what to do for the country, and how do we take things forward. And the dialogues have always been very, very constructive. And that is something which to me is a sign of maturement. I think as the industry starts maturing, discussions from market grab to land grab to movement towards society and the country and the world starts happening. And I see a shift towards that. I'll not be taking much time because when I was sitting next to Mr. Seth, he said, Tapan, when I go to speak, the timer should be on. So I restrict my talk. I said, no, sir, people are here to listen to you. Not to us. I'll restrict my talk to a few words. You have to speak because I don't think that we'll restrict, and put up a timer when you're going to speak. What I'll do, and we'll talk in the future session is, one of the endeavors that we should do collectively as industry, as powerful bodies like IBAI, Council, put this together and all the other bodies that are there. We should have 3-4 clear statements that we should be making together and we should be accountable for it for the nation. And we should do all that is in us to take it forward. Why should I say that we should make statements? When you make statements into media or public, then there's no backing out. You have to do. Let us say what is essential for the country. One, employment generation. I think I did not see when the video was there, the amount of employment generation that brokers have done. I think. Now, what is the employment generation that we can contribute to the country? While every industry is talking of a decreasing in terms of employment, how can we make a statement that in the next 3 years we shall generate 1 million employment for the country? How can we do that collectively together and work towards that? Second, if you look at the trauma of SME, MSME and the catastrophic losses and 25% going bankrupt, 90% not being insured, how do we make a collective statement that we shall ensure in 3-5 years' time, and let's put our head together that we shall ensure that every SME, MSME is covered in India, and we are able to do that. And let's make the statement, a commitment to the nation. And then whatever is required, be it regulations, be it, I think when I met Mr. Seth for the first time and the Parliament Act was getting passed, and he was very clear that, Tapan, we have to do this, we have to have PIR, and I saw all that part of the Act as it got passed. And over time, I've seen how he's worked hard to put things together to do what's for the nation. So when we have progressive regulators, when we have a ministry which is very keen to listen to us, then as an industry, if we don't stand up for the nation and make a difference to the nation, then I think we are missing something, Or third, let's say we have been talking of universal healthcare. I'm also a part of the PFRDA team and Mr. Raman, who is the chairperson there. I spoke to him and now we have NPS Swasth, which is coming in, a segment in which we're trying to see how we use NPS also to address the missing middle and how do we do that. And he'll be talking to the council tomorrow in terms of putting it together. How do we ensure that every citizen of India has a basic health cover where he is not, because of lack of money, is dying or left untreated. No, at least 2 or 3 such statements. And my personal belief is, and the kind of talent that we have in IB and all of you amazing leaders and the council that we have and the CEOs, that time has come for us now to make these statements, live up to it, and deliver for the nation. I think today's, if we go through this conclave and as we talk further in the day, let's try and work on this and let's build on this. No, whatever good has happened, but a lot has to be done. And this also needs to be addressed, the insurance perception which is there in the market. No, how do we see that we are a constructive nation builder, and how do we contribute to that by making the statement? So I'll keep my talk short for now, and we should build on this as we talk further. But thank you, and amazing job done by IBA. And I think I'm very impressed with the leaders in IBA who really are pushing to the next level. 25 years is a lifetime. If I look at it, a generation. Now, if I look at the Vedic culture, the Grihastha Ashram is 25 years. No, I think the next comes in, the next phase of development for the nation of our country. Thank you so much. No.
Thank you very much, sir, for your very passionate and defining and constructive recommendations. And we look forward more in the further sessions. And now I invite our Chief Guest, Shri Ajit Seth, who has had a very distinguished career in economic policy and public finance, and now he leads IRDAI as its chairman at a very pivotal moment and time for the insurance sector. We seek his advice, his guidance. Please join me, ladies and gentlemen, as I request him for his inaugural address.
A very good morning to all. First of all, to Mr. Narendra, the President of the Association. Thank you very much for putting it together, inviting me here, and also several things in your address, but talk about sustainability. Sustainability for the ecosystem, sustainability for yourself, certainly for the system. The business has to be sustainable. I'm not getting into environmental sustainability. That's a different topic, but sustainable for policyholders, public, insurers, and intermediaries. That is the right word to be the way to put it. Second, that how do we work together, regulator, industry, to improve upon our system. Thank you very much for putting it in a very focused manner. Second, my fellow regulator, Mr. Rajaraman, doing super work in promoting and placing GIFT IFSC, one of the fastest growing international financial centers, to serve and supplement, complement, and support financial services for the domestic market. Is a excellent work happening. Being a young regulator, being a new financial center is not an easy one, but the journey has been fantastic, and that is something I must acknowledge, and then we have been working closely. Then, Dr. Tapan, your idea that how do we create value and how do we travel together, so that is a value for everybody. Thank you very much. And then all the delegates from the intermediaries, especially the Brokers Association, members of the Brokers Association, broker community, the insurers, friends from the media. Apart from what I heard from the three eminent persons on the dais, also had a very short, brief, but a meaningful interaction with some of you before walking into this hall. Very meaningful, that ideas, exchange of ideas, that does help us within the authority, that how we can travel together. Now, first of all, I would like to congratulate and commend the association in particular, and also all the members of the association, that in 25 years, what you have achieved. 25 years is a milestone. At the same time, it is also a time to take a stock of and introspect that what we are doing, why we are doing, where we want to go. And if I can borrow perhaps a song, ये कहाँ आ गए हम यूं ही साथ साथ चलते, It is not a position of not knowing. We have traveled together. We have we meaning public, insurers, intermediaries, brokers, regulator. We have traveled well. We have traveled in the right direction. So take it in that song, in that spirit. At the same time, मंजिलें और भी हैं, मंजिलें दूर भी हैं, सबको साथ में लेके चलना है. I can't translate into English. I do understand there are some foreign delegates, but it's difficult to convert a native language into that part. So manjile aur bhi hain, dur bhi hain, saath mein chalna hai. So that's the kind of spirit which we should have at this stage when we are at IBAI at 25, and also IBAI is also almost like at 25. So we also started the authorities journey also on this, and opening of the sector is a little more, 26, 27 years. Second, insurance sector in India has done well. And why I am saying so it has done well? In the last 10 years, economy became about 2.5 times, 2.6 times. And India's economy is one of the fastest growing economies of any size, leave alone big economies. Big economies by miles altogether, we are the fastest growing. But even others, also we are one of the fastest growing economy. Insurance sector, and I'm talking about the life insurance, has also grown by about 2.5 times, 2.6 is exactly the same. General insurance, where you have a much prominent role, has grown by 3.6 times. So in a fast growing economy, any segment of the economy growing with that fast pace is a good performance. But next the question, manjle abhi aur bhi hain. We have to do much better. I see it here. We should be proud, we should be confident. What we have done in the past 25 years, we have done well. But a lot more needs to be done, a lot more efficiently it has to be done. So I will certainly share some of my authorities' expectation, few thoughts which are in that spirit, that how we can even perform a good performance, how we can improve upon a good performance. I talked about life. In life, your share is somewhat in a single digit. But if you look at which are the other channels of distribution, brokers as a group is among other channels in the life insurance are not the most efficient, not in terms of the effort or in terms of the cost. Perhaps that is a reflection that that share is still in a single digit. But when it comes to the general insurance, you have a large share, about 40%. 42%, and it's increasing. And it used to be just about 7-8 years back, it used to about 30, it has come up to about 40%. You are more efficient than others. Obviously, that is a reflection. If you are more efficient with others, more business will come your way. And there lies that how do we move forward to make it even better? Of course, when we talk about intermediaries, there are different channels. Within the broker community also, there are different ones. Some of you focus on retail, some on a commercial, large scale, etc. And a different business model. That is what a complex or a large economy would expect different players to be. But if we talk about effective cover for the population or for economic entities, it would be somewhere around 10 to 15%. Whether all would be ready to buy insurance, that is a separate aspect. But there's a very large segment which would like to buy an insurance product, provided it is affordable, it is well understood, etc. So there's a lot more grounds to be covered. President Mr. Narendra talked about better regulation and sustainability in that aspect. Let me share a few thoughts. In terms of development and regulations being two sides of the same coin. And as the lawmakers had enacted IRDA Act, in the name of the authority itself, there is a regulation, there is a development. Now, is it one better than others? Which one is required? Let me share a few thoughts here. First, in terms of the development, as I mentioned it about coverage, 10 to 15% effective coverage, a lot more grounds to cover. Second piece on development, and where we have to do a lot more, in terms of quality versus growth, and I'll come to that aspect once again, because that's a very fairly important one. Let me focus on the quality. Quality of sales and quality of claims experience. Because on these two depend the trust which the public will have on us. When I say yes, on us, I put it in this manner. I see this ecosystem wherein public is at the center of the universe. Then there are satellites, insurers, intermediaries who serve that center of the universe. And then regulator is on the side saying that everything is happening all right. So we should be clear that they are the center of the universe. So coming to them, their trust is the most important thing which we have to earn and we have to retain, build upon it. And there comes in, trust is either there or trust is not there. There's nothing called 90% trust, 80% trust. That concept doesn't happen. Either I trust somebody or I don't trust anybody. There's only two things. That is a very clear part. So there, the quality of sales and quality of claims experience becomes important. Then a newer area coming up. There's again a development part when I'm talking about. I'm not yet on the regulation. As the economy is growing, new economic activities are coming, or even the regular economic activities, even the retail level, newer challenges are coming. For example, it can be even the health challenges which are coming. But here I am talking about more for the economic entities where the large commercial brokers come in. In terms of risk mitigation versus risk management, in insurance industry, we manage a risk. We provide a cover, which a large pool gets created, few will have adverse impact event and we will pay out of it. It's a risk management. But large brokers also have a responsibility, and that can be not a responsibility and avenue, that how do we mitigate risk through risk mitigation measures, better measures, so that event doesn't happen, adverse event doesn't happen. Everybody is happy. Insured is happy. You as an insurer is happy, Dr. Singhal. And also intermediary is happy that nobody is putting a claim. And regulator is happy that business has grown, risk is covered. So there's a risk mitigation measure, especially for the newer class of assets which are coming up. Coming back to that aspect on a trust, why trust in the insurance sector is more important than any other sector. In any other sector, we pay the price of that product or the service, we get the service, we get the product. This is the only sector where a customer pays the price on a promise that if a trouble were to come, you will stand with me. So the supply is delayed and supply may not be needed at all. So this is a unique nature. That's why a trust is of a paramount importance for us. Then the fourth area in development journey, insurance for all. Authorities' understanding of insurance for all is product should be available, it should be accessible, it should be affordable for the needs and the budget of different segments of the economy, different segments of the society, and in all parts of the country. That doesn't mean that everybody buys insurance. That is for them to decide what they want to do. Our attempt is to make sure that we complete these three. And we are not yet there, that point. So this is a development journey where we have to travel on that path. When I talked about manzile abhi aur bhi hain, So that is one part. Now let me put the other side of the coin, the regulation aspect. Who should regulate? Should authority regulate or let the market regulate? Now the right approach would be that market forces are at play and they create the impulse for regulation. When there's a competition, there's a fair competition, there's no need for a regulator. That is the role coming in that can be developed to a position where there's a fair competition in the market and things then get on an auto mode. That would require efficient play and making sure that market rewards efficiency. That would also require that signals for product, performance and price travel efficiently or understood efficiently. At the moment, we are not in that aspect. We are not in that position. Details about products, details about performance, and I'm not talking about performance of any particular intermediary or insurer or regulator. And third piece on the price, a lot more transparency we have to travel on that path. So I'm expanding that one, that on development side, we have to build upon 3A, accessible, available, accessible and affordable. Then when it comes to the regulation side, trust and transparency. These are the things I will put it. Then let me share few thoughts on regulatory expectations. I'm rather taking a bit of a liberty with which Dr. Tapan said that don't let this watch run, and Narendra did not object to that. Do I have a timer here in front of me? I'm taking more time than I had planned for. So bear with me on that aspect. Okay, no, not maximum, I'll try. Now, when I say that, let me share some regulatory expectations. It is again underlying a one, we have done well. And their broker community, brokers have been an equal part of the journey. Acknowledging that aspect is the question is, how do we improve upon it, do much better? Because our country deserves a lot better. Our fellow members in the public deserves a lot better. So it's in that spirit I would like to set it. Because if expectations are clearly communicated, clearly understood, half of the job in regulator is over. My purpose is only that much to mention, and that makes sure that the market is efficient thereafter. First, and I have 9 sets of expectations. First, on the policyholder protection. The very first interaction of any member in the public or an economic entity happens with a salesperson, a POSP, or an employee of the broker, or maybe the broker himself or herself. That first interaction, when the product is being sold, and thereafter the kind of a support which may be available if the claim were to arise, that sets the expectations of the public. And here, our industry is not sell once and forget it thereafter. The question is, sell today and keep on renewing it. That is how the business comes in. So then it becomes more important that the expectations are set right. So here, the product is sold as per the customer's needs with good analysis, no mis-selling, and a large number of issues which arise, which weakens the trust, is a mis-selling happening. Then the choice is offered with full details about the products, not pushing products which any insurer may be pushing, or I get more commission, so I'm pushing that product. No, customer deserves better. There are so many competing products are available at the right price. Keep policyholder or a public at the center of your decision. There's enough business to be earned. And I'll come to that aspect that where a paradigm shift in our thinking can help. Then support at the time of the claim. Of late, we find that in the authority, a number of requests are coming, and that number is not insignificant, wherein claim consultancy services to be provided. Within authority, we are a little bit puzzled. That is the primary role of the distribution channel, that I am there with you, not only at the time of the sale, but at the time of the claim as well. How come number of people are positioning themselves, ki main claim consultancy, I will do it at that stage. That means something is missing or something is not fitting into the overall pattern. Then focus on persistency rather than persistency is more a term on the life, but on where you have a very strong presence, where is a annual renewal. So focus is on renewal, not just on churn, not getting business shifted from another one. That doesn't add to the value. It doesn't only, the growth will be very, very limited. One disturbing aspect which we notice, and again in the spirit of setting the expectation, I would like to share it with you, that don't set an expectation wherein insurers have to maintain same price in all channels. Why? Don't try to force that decision. That is the insurer's decision. Which channel at what price one would like to sell. Say that I am the most efficient, I'll be sell it at the least price. Now this is something which is happening in few lines of business, which is not a right thing to do. And that will not earn the trust of the policyholders. Second expectation is being fair to insurers. And I'm talking about more to the broker association. Now my time is up as per my expectation, and I am setting expectations for all of you. So a little more time. Being fair to the insurers, especially in the corporate commercial segment. There can be different ways to look at it, but don't create pricing pressure. Insurer needs full information about the risk, about the past history, to underwrite the risk better. It can't be a position of putting a cost pressure so that underwrite it at a price which is not sustainable, and then few come under a problem. So a fair and clear disclosure of risk and insurance history is absolute essential here. Third, expectation is around the transparency. As I mentioned it, few things are doable. Like share information on all products, pricing, insurer, your performance, insurer's performance, placement of risks and challenges. Nothing takes us in an inferior position if we are transparent. Transparent gives us strength. I am more transparent than anybody else. Customers say, I can trust you. At the same time, encourage customer to disclose all risks. It is not the job saying that, okay, I'll be transparent from my side, my insurer side, but you can hide. No, it will create a problem. It is your role to make sure the customer also discloses, whether a large customer or a retail customer discloses everything right. Then the underwriting is right. The claim experience will become better. The last one, which is a difficult one. What about transparency on commission? And I'm leaving it further, just a thought with all of you. This idea that an idea this idea is a powerful idea. The very construct that I represent the policyholder, I do the right selling, I'll support at the time of the claim, but I get paid by the insurer, and I will not tell how much I earn to the policyholder who is ultimately paying the price. There's a contradiction in this statement itself. We have to find a better way of earning the trust and bringing a transparency around that piece. I leave that thought with all of you. Fourth one is around the piece of grievances. As people with 25 years of standing, the responsibility rests on your shoulders as well. You don't just push grievances to the insurer, hey, he has a grievance, please sort it. The expectation is that you analyze that grievance. Whose problem it was, whose error it was, who has gone wrong. Is it insurer or the customer or the salesperson or the broker or the service provider? So you are playing a role of an intermediary. To be fair to both sides of the equation is your responsibility, saying that, yeah, a genuine grievance should get sorted out. But all grievances need not be a genuine one. I do not get served, so I have got a grievance. But it means that problem is with me. I had not disclosed everything. At the same time, hold your employees and POSPs also responsible, who are responsible for the sales. So overall, be the grievance redresser rather than via media. I get a grievance, I pass on to the insurer. That is a role, their role is there for the brokers as well. Fifth element, or the fifth expectation, is around employees and points of salespersons. Very important part of our intermediary, because these are the people who make the things happen. They are the ones who are interacting with the client, with the public. Do proper due diligence when you are hiring. When people are shifting from one to another, be clear that what has been the past record, etc. Provide them proper training and refresher. Now I hear that some segment of individuals should get a much more bandwidth in selling products. More complex products can also be sold. As broker, there is no limit on you. At the same time, it would require that the manpower working with you, either on your direct roles or with whom you have got a contractual arrangement, or you engage them based on a transaction basis, they are better trained. And that is not a role we would like to do it from the authority. We would like all of you to take that. Either IBAI takes that role, or General Insurance Council or the Life Insurance Council should play that role to take that level much higher. And that is significant aspect. Third, keep all records of sales. When we say that there is a grievance against an insurer or grievance against a broker, ultimately there's a human being where it can be traced who did not do the things right. And that idea is not to, part of the idea can be to hold that person accountable, but idea is to complete the positive loop, that how do I improve upon it, that mistake doesn't happen again in my system. That is really an idea of keeping a record of the sale. Then all of you give incentives. Incentives work much better. So first, transparency works as the best medicine for so many things, or best solution, let's put it. For so many of our challenges are transparency. The second would be right incentive or right disincentives. So incentives which are linked to quality of sales, not just a volume. That is a piece where we have to work upon. Sixth one, and that is something when I interacted with some of you before walking in here, some of you brought up that aspect around digital data security, cyber security, and also on the kind of a cost it will involve. Can there be a better method? Can there be a more efficient method? And also the DPDP Act, again, has certain expectation, and you have a different size and volume which all of you handle. So we would like within the authority to have a more meaningful and constructive discussion that how we can do the hand-holding for all of you to move into that direction. But what I would like to bring in at this aspect is three things which gets attention. Remove dark patterns on anybody who is doing selling the product on a website. And I would like you to do an honest assessment with your own organization What kind of a dark pattern you have. That doesn't require a notification to be read. It doesn't require any analysis to be done, but there are enough dark patterns. The expectation is very clearly that public needs full transparency. The dark patterns should not be there, must not be there in our sector. Second element, which is about DPDP Act, having informed consent. It is not just saying that law requires me to get one consent. So I get a consent without making the person understand what one is checking the box and thereafter giving a consent. It's an informed consent. That's important because that will help in building trust. Jab claim aayega, to then he will say ki aapne hi sign kiya tha. Last piece I would like to mention here, maintain data as per the regulations. It's not that our life within the regulator will become easier. That will help you in performing your duty in a much better manner. And this is something which I indicated with some of you, that some of our regulations have been written with a manual word. Now we are in digital India. So the idea is that regulations also have to move into that direction. Your data maintenance also have to move into that direction, which will make the life easier for everybody. Seventh expectation is around inclusion. Developing unserved or underserved products. Not products, markets. Can there be something, though we have RUSO guidelines, rural and social guidelines, in what manner it can be improved upon? SEBI, as a regulator of the capital markets, have come out with a concept of a B30. How to reach it out beyond large cities. This very large market, moving beyond the top 10% of the population, from 10 to 15, or from bottom 50%, they may not find today affordable to buy a number of products. But thereafter, the top half, leave alone the 10%, the 40%. Today, how do we reach out to them? And then there is a very large MSME segment, and I am glad Mr. Tapan brought it out, that aspect, that as an industry can we set it out that next 5 years, next 2 years, will take that coverage of this underserved market from X to Y, which is a good one. Let's work towards that aspect. And there can be, MSME is one segment, which is a largely a underserved area and coming up. Eighth one is around the innovation. And of course, you are the ones who interact with the public and the entities more closely than the insurer. So what product is being expected, where the innovation can happen, insurer need that honest feedback that, hey, market is expecting this, your product has not moved into that direction. That is something which is a good conversation between, say, IBAI and General Insurance Council can also be helpful. If we can be of any assistance, but we would like to be on the site. All of the interaction should happen between two of you. At the same time, being in digital India or digital India era, we have to necessarily use technology. It is not an option. It is an imperative that how we sell better, how we serve the customer better. And there's a lot more to be innovative about it. That brings me to the last expectation, is on financial prudence and health of the sector. Focus on financial prudence. Why I am mentioning it? There is no reason why distributor brokers, some of you, should have expense structure matching or exceeding that of insurers. When we receive letter saying that your cost structure entails 30% or more of the premium which you generate, that sets us thinking, hey, what is happening in the sector? And I'm not talking about some of the smaller brokers. That is something, again, I'm representing, when I pointed towards to Dr. Tapan as a General Insurance Council, their limit is 30%. If 30% is the cost of the broker, who will do the business thereafter? So there is something missing that are cost models which we have adopted. POSPs are integral part of your journey, but at the same time, that is not a channel which should push up your cost. You have to find a better way of reaching it out, that where the effort lies and where the sales will happen. Now let me try to wind it up, my sharing of thoughts. What is a regulatory approach you would like to be? That is what you can expect from the regulator. As I mentioned it, first approach, we encourage transparency. That is a best way of dealing with it. Second, right amount and right placement of incentives and disincentives. Only when both those are not working and for a sufficient period of time would come the prescriptions. So as a regulator, authority would like to be, if all of you are on first two rather than getting into on the third part of a prescription part. So what are the choices before us? As I mentioned it, ours is the fastest growing economy, and a market, Indian market, rewards efficiency and performance. Look at the sectors which have done well, better than the growth rate in the economy. Each one of those sectors are the ones which have become a lot more efficient, and whether in the services or goods, irrespective of whether those are tradable goods or services or non-tradable goods or services, meaning that across the border can't happen. Even for those products and services where it can't be traded across the border, sectors which have done well, better than the growth rate in the economy, are the ones which are more efficient and which are a lot more transparent. And we would like insurance sector to be reached that position, because as I mentioned, with a large unmet need, there's no reason why insurance sector should not be growing. To begin with, 1.5x of the growth rate in the economy. Somewhere we have to reach even double the growth rate of the economy. That is the kind of a potential is there, but we have to get our act together. So that would require high quality and affordable price. Maybe for the top 1-2%, pricing may not be important, but thereafter, our market expect, give me good quality at affordable price. And it is a doable activity. So first choice, high margin with opaqueness, leading to high price and low coverage. Same amount of income I generate. Second choice or second option, low margin with transparency, affordable price and large volumes. I get the same income. Top line will remain the same. Top line not for the insurer, top line for you. But then you would have served a larger purpose to come in. To my mind, is the option 2, is the where the Indian market expect all of us to reach there. That is a manjul which we have to reach. Whereas volumes doesn't come, or the income, or rather the income doesn't come by high margin, low volumes, low number of cases. Rather, it comes from thinner margin, but more volumes, more deals happening, more contracts happening. That brings to another sort of a choice before us. Do we aim for maximizing revenue and quality, whatever it is, we can just manage and go on? Or we say no. Our business strategy is topmost quality, business will follow. Again, to my mind, is the second approach. We make sure that is the topmost quality that will earn the trust, business will follow thereafter. So that brings me to the last two thoughts. We would like to have a more structured interaction between the authority and the IBAI. Not in the spirit of saying that yes, everything is fine, but is a more intense discussion where we can improve upon, where we can have our journey in a much better manner. That is what the interaction we would like to have. This is not that we would like to do so. Just look at that. When the Parliament enacted Sabka Bima Sabki Raksha Act, I'm sure that all of you would have read. Act everybody would have read. And I do hope that all of you had also read A statement which gets appended to the bill is called a statement of objects and reasons. That's when the government presents it, it is contained there. And there are two keywords there. Reforms to do the sector much better. Second, accountability. That talks about accountability of regulated entities as well as accountability of IRDAI. This is the first time I have seen where an act is talking about accountability in that clear terms and also says accountability of the regulator itself. Now just look at that. When the lawmakers are setting the bar so high, we have to position ourselves so that we can take that jump and clear that bar. Thank you for the patience with which you have heard me. Thank you very much.
Thank you very much, sir, for your visionary guidance on our shared vision of insurance for all, and emphasizing that the measure of success is not in the quantity sales, but in quality. Emphasizing that it is about expanding outreach with a purpose, and the purpose of responsible distribution, customer-centric policy sales, and then our collective commitment to trust, to quality, to accessibility, affordability, accountability, transparency. And in all this, leveraging on technology and a focus on financial prudence. Thank you very much, sir, for your very constructive food for thought and contemplation for everyone. Thank you very much, sir. And now, ladies and gentlemen, we have 3 publications which are going to be released, and I request our chief guest and our distinguished guest of honor to please release these publications. The first publication, ladies and gentlemen, is the special commemorative edition of IBAI, iBroker, and I would also like to invite our secretary, Shri Nirmal Bajaj, to please join us here on the stage. This, ladies and gentlemen, is a special commemorative edition of iBroker, a reflection of the industry's remarkable journey, capturing key milestone, emerging trends, the collective vision shaping the future of insurance broking in India. More than a publication, it in fact serves as a repository of knowledge, of insights, inspiration for the fraternity. Thank you, sir. And for the next publication, may I invite here on stage Shri Ashok Jain and Shri S.K. Rustagi. The next publication to be released is the Compliance SOP Handbook, and inviting Shri Ashok Jain and Shri S.K. Rustagi to please join us here on the stage. Our officers.
Sir, I'll just like to say a couple of words. Dipti, Janki, can you join us, please? So, sir, by the time they join us, I just requested them just 2 weeks ago that why not we, on this occasion, create a SOP so that all small and so many brokers which got licensed now, they can be guided all the time. So they did a fabulous job. In just a week, 10 days, they finished this whole book. Thank you, sir.
So, ladies and gentlemen, in a rapidly evolving regulator landscape, compliance, as we say, is not merely an obligation, but it is... Can we have the books, please? They stand as the cornerstone of trust and responsible business. This Compliance SOP Handbook has been designed as a practical guide to help the insurance brokers strengthen governance, ensure consistency, and uphold the highest standards of regulatory compliance. We would also like to flash on the screen if we can flash the QR code, and if you can have the QR code on the screen, please. You can scan the QR code, and through that you can download the compliance SOP handbook. Thank you very much, and congratulations to the team of Shri Ashok Jain and Shri S.K. Rustagi. The next is the release of the claims handbook. Ladies and gentlemen, at the heart of every insurance promise lies an efficient and empathetic claims process. The claims handbook brings together the best practices, standardized procedures, and practical guidance to enable faster, transparent, and customer-centric claims management. And before we conclude this session, we would also like to express our heartfelt gratitude and appreciation to our chief guest and our distinguished guest of honor. May I request the President, sir, to kindly present these special mementos. Please join us, ladies and gentlemen, as we thank our chief guest, Shri Ajay Sethji. Thank you very much, sir. Thanking Shri K. Rajaramanji. Thank you to Shri K. Rajaramanji. Thank you very much, sir. And we'll close with a group photograph. You can request the gentleman to kindly step forward.
I'll request my board members to please join me.
All the board members are requested to please join us for this photograph. Thank you to everyone. In fact, this photograph represented what we say, Mile sur mera tumhara to sur bane hamara. We had all the leaders from the insurance brokers fraternity with the regulators, the leaders here on the stage, thanking each one of them for very insightful views, very constructive ideas, which we take forward in our further sessions. Ladies and gentlemen, may I request you all to remain at your respective seats, for we are going to be moving straight into the next session. We're just setting the stage towards that. The next session, and I think the constructive suggestions and recommendations as extended by our chief guest, Shri Ajay Seth, for the industry, has given us a lot of food for thought and contemplation and action as we take these sessions further. This session is on decoding the insurance legal and regulatory framework. With the next session. Ladies and gentlemen, throughout yesterday and today, the focus and emphasis has been on collaborations and collaborating with the best of the minds. And in this session, as we look towards decoding the insurance legal and regulatory framework, we have leader of the industry, Ms. Shel Jalal, partner Shardul Amachan Mangaldas and Company, who's going to be addressing us. This stands as a very important session, ladies and gentlemen. May I request you all to be kindly taking your seats. We request for your presence at your seats, please, and for this and your kind attention for the session. May I request everyone to please settle down so that I can invite our eminent speaker of the session. May I request everyone? 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 Ladies and gentlemen, in the interest of all, we'll take a 10 minutes tea and coffee break, and then we'll reassemble the hall for the next session. That's going to be addressed by Ms. Jalal, partner Shardul Amachan Mangaldas and Company. May I request 10 minutes of tea and coffee break, and then requesting you all to be back at your respective seats. May I request everyone? May I request everyone? Ladies and gentlemen, may I request you all to kindly take your seats so that we can start with the session. And let me just apprise the August gathering. We are running 1 hour and 5 minutes late. That's going to be having cascading effect on all our sessions, including lunch. We will have to shorten the lunch time and maybe forego some of the tea breaks. So please, we solicit your support in starting now our session. May I request everyone to be kindly taking your seats. At the end of the conference and during the lunch hours, we'll get ample time towards networking. We have very distinguished experts of the sector joining us. As we said in the beginning, today the spotlight is on policy, on regulations, on capturing the legal side of it, and on collaborations. So all the eminent speakers who join us today, who are going to be addressing us, they bring in extensive experience, expertise in their respective fields, and they are there to be guiding us, to be helping us, collaborating with us in shaping this progressive future for the insurance landscape. So welcome back, everyone. The session on decoding the insurance legal and regulatory framework. As we heard also from Chairman IRDI, and we all also understand that the insurance sector is evolving with new products, emerging technologies, new business models, and towards that, a robust legal and a regulatory framework is required that extends the foundation of trust, of transparency, of accountability, of ethics, and towards our sustainable growth, which the chairman had elucidated. So this session is going to be offering valuable insights into navigating an evolving regulatory landscape and the opportunities it presents for the industry. To lead us through this important discussion, I invite our eminent speaker, Ms. Shailja Lal, partner Shardul Amarchand Mangaldas and Company, a distinguished legal expert with extensive experience in insurance, financial services, mergers and acquisitions, and regulatory advisory. She has been advising leading domestic and global insurers on some of the sector's most significant transactions and policy matters. Ladies and gentlemen, please join me as I invite Ms. Shailja Lal, partner Shardul Amarchand Mangaldas and Company, the speaker of this session. May I once again request, and a very humble request to everyone, we are here towards knowledge sharing, knowledge gaining, and all the sessions have been accordingly planned, curated by the organizers, and in that we request for your kind attention and your time. सभी लोग जो अभी भी खड़े हैं, जो बाहर की तरफ हैं, हम अपना अगला सत्र आरंभ कर रहे हैं. आपसे निवेदन करना चाहेंगे कि आप प्लीज अंदर की तरफ प्रस्थान करें. If you're still having your tea and coffee, may I request you to be with your tea and coffee in the hall, please. Ladies and gentlemen, our Honorable Chief Guest Chairman IRDI, as he emphasized on collectively building trust, collectively working towards responsible distribution and customer-centric policy sales. He emphasized on quality, on accessibility and affordability, on transparency, and in all this, working towards the next 25 years, it's going to be the key, the core is going to be our cohesiveness, our collaboration, and protecting and projecting and promoting the interest of the policyholder. So understanding the legal and the regulatory framework, further decoding it, we have our speaker, Ms. Shelja Lal.
Good afternoon, everyone. I think I'm speaking to very few people here, and I would request everybody who's outside to kind of join us inside to listen to me. Especially after a very, engaging and dream panel, which we had with the IFSCA chairman and the IRDA chairman and, the various other dignitaries. I would really like to share a few thoughts, which is probably on the same vein as what they also spoke. And I must say that I've been given what is perhaps one of the most delicate tasks today in this room, and that is to talk about the regulatory framework while standing before what I was hoping is IFSCA chairman, the IRDA chairman, and the various other the members of the authority and other dignitaries. What I will try is to kind of talk about the same topics, which I had planned to kind of speak before them, but probably in a much lighter way now. Honorable dignitaries, distinguished members of the Insurance Brokers Association, the President, Insurance Brokers Association, industry colleagues and friends, good afternoon. It's a privilege for me to stand here amongst industry leaders, regulators and colleagues who are collectively shaping the future of insurance in India and to celebrate 25 years of IBAI. Interestingly, I've also been practicing law and especially in the insurance sector for more than 25 years, and I've been very much a part of this journey, seen it all, survived most of it, and happy to tell the tale. So here I am, and very happy to kind of have been invited over to in the presence of such an august audience, and I hope that I bring out some thought-provoking statements for you to kind of mull over. We are very fortunate, without question, to have some extremely active regulators and whose intent has been consistently quite progressive, with a vision of insurance for all by 2047, which by all measure is rather ambitious and quite powerful. But as we stand here today, we are not going to be talking about the intent. What we are going to be talking about is what the industry truly needs from a regulatory perspective to unlock its full potential. In the course of the next 15 minutes, and I promise you I won't take more than 15 minutes, I would like to share and reflect on 7 perspectives or priorities, or you may say expectations, which are practical, compelling, and thought-provoking, that can act as a true catalyst for growth, innovation, and trust, which we can unlock together. Well, first and foremost, you would almost all of you unequivocally agree that a stable regulatory environment or framework, which is coupled with policyholder trust, is a basic foundation of long-term growth in insurance. It protects policyholders, stops the market from fragmenting, and it gives investors the confidence to infuse long-term capital into a sector that deals by its very nature in long-term promises. Industries around the world and at home keep making the same point, that stability has to be balanced with frameworks that are agile and encourage innovation. Regulators too face a common dilemma. How do you write rules for an industry moving at a pace which is faster than the consultative process? I'm sure most of you would agree. There have been many instances where draft rules are formed, but by the time it becomes law, it's kind of infructuous and things have moved on. Well, India is no different. In fact, given the size of our protection gap and how ambitious our national goals are with respect to insurance for all by 2047, the stakes here may be higher than elsewhere. Consistency matters too. Insurers today are managing climate risk, geopolitical uncertainty, and fast-moving technology all at once. A stable, predictable regulatory environment lets them invest with confidence, plan in decades rather than quarters, and do so without worrying about sudden changes to capital requirements or supervisory expectations. Before I look ahead, I want to pause and recognize what's already been done in the regulatory framework. Over the last several years, the government and the authority have taken some genuinely far-reaching steps to flush the market with global capital, enable ease of doing business, and encourage corporate restructuring. Having had the privilege of closely working with the industry in this journey, I can say with conviction that the progress has been quite remarkable. So in this context, let's look at some of the reforms which have already taken place, especially in the context of the Sabka Bima Sabki Raksha Act. I'm not going to be focusing simply on intermediaries or brokers. It's going to be a mix of the changes which impact not only intermediaries but also insurance companies. So first and foremost is the capital and investment regime, which is opened up with the FDI cap being lifted from 74 to 100%, where insurance companies have been permitted to infuse capital FDI up to 100% under the automatic route. This puts insurers on an equal footing with insurance intermediaries with respect to FDI. And as you're all aware, in the intermediary space, FDI was permitted up to 100% for quite some time ago. In a complete shift from historic precedents, statutory frameworks now also allow the amalgamation of insurers with non-insurance business subject to oversight, IRDA oversight. Now, this is a privilege which is only given to insurance companies, because from insurance brokers, the IRDA continues to say that you can only merge or amalgamate an insurance broking business with another insurance broking business. That hasn't changed yet unless the regulations kind of relax those rules. The minimum threshold for prior IRDA approval for equity transfers with respect to insurers have now been relaxed from 1% to 5%. Which lowers the friction for institutional minority investors. Further, to attract global risk-bearing capital, the minimum net owned funds for foreign reinsurance branches have been slashed from 5,000 crores to 1,000 crores. These are some of the capital and investment changes from that perspective. Going on to intermediaries, I think the most significant change is the perpetual licensing permission, where intermediaries no longer face repetitive operational renewals, and you could move ahead instead to a one-time registration framework. This is quite significant from the perspective of insurance brokers and intermediaries. Introduction of managing general agents is also something in the offing. It's already been introduced in the Act with the Sabka Bima, Sabki Raksha amendments. However, we are anticipating that new regulations will officially recognize MGAs as a distinct class of specialized intermediaries, allowing them to wield both underwriting and distribution capabilities. So this is certainly a space to watch for more registrations in the country. Moving on to financial and accounting oversight, there's been transparency and reporting safeguards have been elevated to bring the domestic market in sync with global practices. So effective April 1, 2026, all insurance categories must transition to the Indian Accounting Standards or the Ind AS. The mandate to prepare and present an annual actuarial report, which earlier only was expected from life insurers, have now been extended to all general insurers, health insurers, and reinsurance business. Similarly, insurers investing AIFs face strict geographic ring fencing requirements, and policyholder funds cannot be drawn for overseas assets, requiring explicit segregation within fund structures. Moving on to consumer protection, the regulator has been armed with broader enforcement powers to protect consumer interests. So the statutory penalty for contraventions and penalties have been increased by the IRDA from 1 crore to 10 crores. The authority also possesses express powers to order the disgorgement of wrongful gains against entities violating insurance laws. This is particularly important because disgorgement has not been expressly stated in the Act previously. Operational overheads, including commissions and management costs, are strictly bound by an EOM cap framework to keep policy costs competitive and prevent market-wide capital erosion. So you can see that each of these is a deliberate, thoughtful step forward with a strong philosophy behind them. Having said that, in the context of what I was talking earlier, in terms of what the market needs is actually stability. What the industry now needs is also longer regulatory horizons. The industry probably is scared of constant changes. We need a longer regulatory horizon to absorb the changes which are introduced. Structured consultation process is important. There needs to be more and more structured consultation processes similar to what the IRDA chairman alluded to earlier in the day. We also need clear, predictable transition timelines. When new law is introduced, the request to the regulators is that there are prescribed transition timelines to enable all stakeholders in the market to transition in a fruitful manner. Stability is not the opposite of reform. Rather, stability is what makes reform effective. Now, I talked about the first pillar, stability. Now, moving on to the second pillar that supports a strong regulatory framework is also kind of a philosophical one, and that is the move from a rule-based regime to a principle-based regime. Globally, the most mature regulatory markets focus on outcomes instead of detailed prescriptive regulations. So, are customers treated fairly? Is the insurer solvent and well-governed? Are risks being managed prudently? So all of these hows is actually, the question of how was these done is actually left to the regulatory entity. The world's biggest, most trusted financial centers, be it London, Singapore, Hong Kong, Zurich, all have high, consistent standards where businesses can operate with confidence and where policyholders and investors know the rules are clear, enforcement is fair, and the referee doesn't take sides, unlike maybe the FIFA World Cup. To its credit, India's trajectory under the authority has been firmly on the right side of that choice, and the recent reforms reflect a real shift in our regulatory philosophy. So a move towards principle-based regulation is certainly, it has certainly been done. It's not that it's not being done. And there is closer alignment with international standards used in other global financial centers. And there's also a clear signal that India is open to international business on a level playing field. And this shift is very critical because it encourages innovation, it reduces tick box compliance, it builds accountability rather than dependence, and seek to enforce that regulation must signal trust. But the real question is, in our efforts to move from a rule-based regime to principle-based regime, have we actually been subject to more compliance? Do we see that management of our insurance companies, insurance intermediaries are spending more time with compliance requirements in the name of a principle-based regime rather than rule-based regime? And the question really out there for the room is, was it better to have more prescriptive rules? I'll leave that thought there. The third point which I wanted to talk about is proportionality, and when in the rule-making process, one size does not fit all. Today, a large established insurer and a digital-first insurtech are often subject to very similar compliance expectations. That simply does not reflect reality. Now, even in the insurance context, you have different types. Insurance brokers context, you have different types of brokers. You have the retail brokers, you have the digital brokers, you have MISP-focused brokers, you have the POSP-focused brokers. The question is, do we need a tiered framework which is based on size, risk profile, and the business model? A startup which is experimenting with embedded insurance, for example, should not be weighed down by the same compliance burden as a large, diversified insurer. Their size is different, their goals are different, and perhaps regulations should also treat them differently. If we want innovation, we must regulate proportionately. Perhaps a case in point is the EOM regulations. That brings me to the fourth point, and that is a clear framework for insurtech and digital models. There is an urgent need for a coherent digital and insurtech framework. The chairman also spoke about it earlier today, that technology is no longer at the periphery of insurance, it is at the core. And yet, we still grapple with some basic questions. Do we all completely understand the impact of the DPDP Act on our businesses? Is an insurance broker or an insurtech a data processor or a data fiduciary? Where does outsourcing end and core insurance activity begin? How should embedded insurance be regulated? As an insurance product or as a non-insurance product? Well, the absence of clarity on some of these questions does create friction, not just for startups, but also for insurers and intermediaries looking to partner and scale. What we really need from our regulatory framework is a dedicated digital insurance framework, perhaps in the form of a Q&A or perhaps in the form of a detailed set of rules, but which clearly outlines the do's and the don'ts. Clear rules on data usage and ownership, especially in the background of the DPDP Act and the increased penalties which that can attract. Defined boundaries for partnerships and platform. For example, there are so many affinity partnerships, but do we all understand what really is the informed consent that is required for each of these partnerships? And when you get data from customers for various partnerships, it's very important to understand these concepts of informed consent. So just to sum that point, innovation thrives where there is clarity, not ambiguity. Moving on to the fifth area, which needs to be focused on, is reinsurance and global integration. Now, there, I think has been fair to say, there's been a lot of progress in that field with respect to reinsurance and global integration. Thanks to all the efforts of the IRDA and the IFSCA, we've seen that there has been a lot of focus on GIFT City as a global insurance and reinsurance center. And we've also seen that there's been a spate of reform in the reinsurance sector with new reinsurance companies being opened up and also new partnerships being formed. But again, what we need is a liberalized reinsurance norms, easier cross-border participation, because there still are questions with respect to GST, tax, FEMA, and the like, and a globally competitive regulatory environment. Moving on to consumer protection, because no discussion can be complete without talking about the policyholder and protection of consumers. You will all agree with me that consumer protection is non-negotiable and paramount. But the approach to consumer protection is equally important, or I would say more important. We need to be careful to ensure that regulation in the name of protection does not increase costs, limit product choice, and slow down innovation. These are three critical matters to think about. What we need is smarter protection, which is based on transparency, simplicity, and effective grievance redressal. Three very, very important pillars. And increasingly, what we need to do is to leverage technology for claims monitoring, fraud detection, and real-time oversight. Again, because protection is not just restriction, it's also enabling consumers to get what is the best choice for them. The last aspect to discuss is inter-regulatory coordination. Now, having said all of this, we all discuss that digital insurance here to say, but insurance does not operate in isolation. It intersects with banking, securities, and fintech business, which is why a coordination between regulators is critical. So you have the RBI, the SEBI, IFSCA, the income tax and GST authorities, the MeitY for digital for cyber security concerns. So whether it is bancassurance, investment-linked products, or embedded finance, aligned regulation creates ecosystems. For example, especially in the context of tech-led insurance, the main teaching point is that regulatory characterization depends on what the technology does, not what the company calls itself. So the company may call itself whatever it is, but really depends on what are you actually doing with your technology. So, and that is what drives compliance. It is multiplicative, and each regulator has jurisdiction over different aspect of the same transaction. So there is it's not sequential, and all compliance obligations apply simultaneously from day one of the operations. Now, I'm going to close this discussion and leave you with a few thoughts. The future of insurance in India will be shaped by not how tightly it is controlled, but how well it is enabled. Regulations needs to evolve, and that's a healthy response to any changing economy with changing customer needs and the fast pace of digital growth and globalization. The opportunity before us is to build on the strong foundations that have been laid and to continue enabling the industry to scale with confidence. We should be proud of our industry's track record. The fact that we haven't had any sector-wise crisis is no accident, touch wood. It shows both the regulators' watchfulness and the industry's discipline. That strong foundation gives us a real chance now to close the insurance gap. The IRDA's efforts to cut compliance burdens and give market players more freedom is a welcome sign, and we are headed the right way, and they deserve more than just applause. They deserve our active support and partnership. As the industry eagerly awaits the distribution reforms and the clarity on the commission limits, this isn't a call to resist change. I'm not doing that. But it's a call to make that change together with a clear purpose. Change that comes in phases, is well coordinated, and is built on real consultation with the regulator. That's how we will turn a well-regulated market into a thriving one. Thank you.
May I request Mr. Sumit to please join us in presenting the memento. So, well-regulated market is good for the health of the insurance sector. Key message, and yes, once again the emphasis on greater collaborations. The next session, ladies and gentlemen, we have a special address by the general insurance industry leaders, and 3 industry stalwarts are going to be joining us here for this special address. Please join me as I invite Dr. Tapan Singhel, the Chairman, General Insurance Council and the Managing Director and CEO of Bajaj General Insurance. As I said earlier also, one of industry's most respected voices, and in fact a champion of innovation and customer-centric insurance. He, ladies and gentlemen, is also a member of IRDAI's Insurance Advisory Committee. He is member of the PFRDA's Pension Advisory Committee, a founding director of Bima Sugam, a board member of the Institute of Insurance and Risk Management, a board member of the Indo-German Chamber of Commerce, and a member of Governors Council of the World Economic Forum. And he, ladies and gentlemen, has pioneered several industry first innovations, from bancassurance and virtual sales offices to path-breaking products such as India's first surety bond insurance, pet insurance, and healthy infinity. His leadership is driven by a simple philosophy, putting customers first, which we have been talking about. Thank you, sir, for joining us. Our next eminent speaker, Shri Hitesh Ramesh Chandra Joshi, the Chairman cum Managing Director of General Insurance Corporation of India, the head of India's national reinsurer, playing a pivotal role in strengthening the country's reinsurance capacity and global presence. And Shrimati Girija Subramanian, Chairman cum Managing Director, New India Assurance Company Limited, leading India's largest general insurance company with a strong focus on growth, on resilience, and customer trust. So, ladies and gentlemen, our first speaker of this session, I invite Dr. Tapan Singhel.
Thank you, ma'am. It's always a pleasure, honor to be amongst the brilliant brains of the insurance industry. The basic idea that when we have such sessions, is to see what more can we look into and how do we look forward into as an industry that we can be talking about. Let's look at India 25 years back, and then let's look at India today. 25 years back, we were talking of liberation, we were talking of opening of industries. India required FDI. Mr. Manmohan Singh, as the finance minister in 91, started opening up the market. And the whole world was talking of globalization, and the idea was collaborative, and how do you look at expanding businesses and industries. The premium for the general insurance industry was less than 10,000 crores. I remember New India had 3,000, some 200-300 crores of premium in 2001. That was when the market opened up. Distribution was predominantly agency. There was no other distribution. It was agency or direct. That is how it was. In claim settlement time, if I look at motor, if you got a claim check in 2-3 months, it was considered good. It was reasonable. And I think that even then the customers were reasonably happy, and the industry was trying to do its bit. Opening of the industry, and in 25 years, most of us would not realize, but we have seen financial shock. We have seen the world market collapse. We have seen wars. We have seen disturbances. Now we have a world economic order in which it's a collapse. Now nobody's talking about globalization. You have tariffs come in. You have how do you look at doing your own stuff, and how do you look at your own markets, and how do you build that? You also see resurgence of India. 25 years back, when we used to go to any foreign country, I think if you are an Indian, it would look like, okay, Tika, you are somebody from some country, maybe still riding elephants. Today, when you see an Indian, you are seen with a lot of respect because of the contribution that you had to the world order, which is there now. The world has changed. A lot has flown from the time when we were there. Our attitude towards business has also to reflect the pride that our country has built across the world. Now let us look at it. If I look at our business, even today when we have to look at some kind of product, some kind of capacity, we still look at a lot of foreign expertise and knowledge, which is good. I think learning we should always have. But can we think that in the next 5-10 years, we also create amazing expertise in the Indian market with all the learning that we have, where people from outside our country look at India in terms of learning, building businesses, or building new solutions for the emerging world order. The emerging world order now is shifting to the emerging markets. It is from the developed markets, it's shifting to emerging markets, where the markets are different. And India is different, and China is different, and Indonesia is different, Africa is emerging now. Can we be the center of excellence? Can we be thinking on those terms of putting it together? With the world order changing, with the position of India the way it is the industry now ready to take on the onus of being a leader in the space in a global positioning and coming out with solutioning which is very different from the way the world has been used to seeing the way insurance gets handled, and in terms of terms, condition, putting it together. In the era of tariffs, in the era when things are getting closed down, what a solution that you have of trying to be able to protect your Indian interests across the globe and in India. When I say era of things getting closed down, let me give you some example. When tariffs got hit and sanction got hit, even a company like Microsoft switched off the system for a company which is under sanctions. Now, we are talking of an Indian company, I normally don't take names, but most of you are aware of this thought I'm talking about. So imagine your entire process, you're talking of ILMs, you're talking of generative AI, you're building your entire company using automation, you're trying to see to bring efficiency, and the talk is that 85% of the organization will be pure sales, 15% will be support system, very good. And tomorrow sanctions comes in, for some reason, whatever, and the ones who are providing you generative AIs and LLMs, they shut it down for you. It has happened. That's why I said it is not a futuristic thought that it may not happen. In the current context, one leading Indian company had sanctions and Microsoft shut down their services for that company. Now that is, which has already happened. So in a scenario like that, when the shutdown happens, how does business work? What collapses happen? And how do you look at it? Obviously, now you see countries talking of indigenation of LLMs. They're talking of looking at generative AI being built inside. You also have Google talking of putting data centers, putting it to the localized context. Good. But we are still on the same frame of looking at solutioning for countries like ours in terms of what the Western world has always been provided for. We still are looking at the Western world in terms of how do we run our insurance business in a position like that. To me, in 25 years, the world has changed, our country has changed. Indians as such, in terms of way their position as thought leaders, has changed. Most of the global companies are run by Indians now. Has our industry come to their speed? And are we thinking in those lines of the power, the dignity of the emerging world order, and how do we put together is one thought, because today I have the broking association leaders, I have the industry leaders sitting here. It's a thought I wanted to leave all of us with, and maybe put it as an agenda points where we discuss further and see how do we come up to this speed. The second I mentioned is our reputation part. I did mention when Chairman IIDA and the University Chairman were there, I didn't want to take on why did I mention this point. If you look at our industry, whatever we do, whatever we talk that 40% infrastructure build is happening with insurance money, we have contributed to 35,000 crores of claims during COVID, and all the amazing talk that we may do, but the reality is right from the parliament to the common person on the ground to the industries, they don't have faith on the industry. It's a reality. Well, you speak to any common person and his view on insurance, and the normal answer would be not a very happy one to be happening. Now, when we heard the chairman's speech, he spoke about two things, trust and transparency. If I look at those two words and I put it in terms of how many times that word frequently appeared in the conversation that he was talking about, we'll see that it came many times. Trust, transparency, what should the industry do, be it disclosure of commission, and he left with a lot of thought process which is there. Trust and transparency and the proactiveness of the industry to demonstrate its contribution to society and nation is something which has to be done. Otherwise, we shall always be an industry which everybody talks about, not in a very positive manner, in spite of what we do. An industry which has a combined ratio of 121%. I did mention to the chairman once, when we're talking of what benefit does a policyholder get from industry perspective. I said, for industry at a combined ratio of 121%, an EM of 30%, and the industry is compliant with the EM. If I look at overall industry numbers, it comes at 30%. An EM of 30% means that 90%, 91% is going to the customer. Show me any industry in the world when 91% of the premium is going to the customer. Now, if any one of you can give me any demonstration of anyone in the world where 91% of the premium is going to the customer, it's not so. The industry does a phenomenal job. It is a different issue that the industry goes through its own crisis of how does it manage capital and how does it put together. But from what it gets from the customer to what delivers to the customer, it does a phenomenal job. In spite of such a phenomenal job, and companies which lose 6% to 100, they are known as the most customer-centric companies of the world. And I can give you an example like Amazon, the loss was 6 to 100. For a company losing 21 to 100, you still have this reputation, So it is not about feeling bad about it. It's not about taking it, okay, this is the nature of business. No. Proactively, if somebody is talking of trust and transparency, we have to put our best foot forward and demonstrate that it's not that somebody has to tell us about trust and transparency. We shall lead the initiative of trust and transparency. We shall lead the initiative of what difference we make for the nation. And how do we make those statements, live up to it and deliver to that? Because then the transformation of what the industry does for the nation comes out very, very clearly. And I'm very thankful to the media friends. Now insurance is getting covered much more than it was getting covered. At least the issue that is there, let's say the hospital association issues, the increase of medical inflation issues. I think the council has been taking it up very, very strongly, putting it together in place in terms of how do you do that? Because the cascading effect of it on the nation is huge. If you have a medical inflation 3 times the average inflation, it means in 10 years' time on a compounding basis, an average Indian will not be able to afford health care. These are of consequential, drastic, kind of effects which the nation would be facing. As responsible people who understand risk management, who understand how this plays out, we have to do our duty towards country and put that together. And that's why in the morning, I did mention that there are 2-3 statements which come out very clearly. One, SME, MSME, right from the government, focus on that, or right from, if you look at the regulator focus. In fact, when Mr. Seth spoke, he did speak about that. I'm ready to be a part of the SME, MSME initiative to see how do we make complete coverages. Can we do it? We can do so. Employment generation, 1 million youth. Can we provide employment? Yes, we can do. We have demonstrated. One of the biggest employment generators for India is the insurance industry. Why can't we be proactive and set these targets for ourselves and demonstrate that? Why can't we be proactive and talk about the missing middle and health and solve it together? Can we do it? Yes, we can. Do we have the brains? We have the brains. We have expertise? We have expertise. I see leaders sitting here. I mentioned Sanjay's name also. Now, if I look at Ms. Girja or Hitesh, or let's say, Mr. Bajaj, Rahul again here now. I see, and Rakesh. I see amazing leaders who have global exposure, who have learned, who have created businesses, who know how to create businesses, who know how to create markets, who build it together. Why should we not, as an industry, proactively make it our mission to state it and live up to it and transform this perception that when people who talk of trust and transparency for industry, which thrives on trust and transparency, that is our fundamentals and the basics of it on which we thrive. That time has come for us to put our foot forward and make the difference no, in terms of putting it together. But that is how it's going to happen. Rest is fine. Rest is business as usual. We will fight. Sometimes we will lose. Sometimes we will gain. Sometimes we'll gain market share. We'll put it together. Historically also, if you study, and some of you would be, who have studied sociology or have looked at umpires getting created, when an umpire gets created, in the initial stages, you have land grab, you have violence, you have aggression. People want to capture as much land as possible. That's the initial stage. The second stage for umpires is, if they survive that initial stage, is economy, is trade, is prosperity. And the third stage is intellect for the empire, in which you have art, culture, you have prosperity for its people, and that is goes. These are phases in which when you build companies, when you build umpires, they go through that. We have gone through the land grab. In my view, we have reached the stage of the highest pinnacle of land grab now. If I look at the combined ratio, I feel it will deteriorate further this year. Now going forward, 121, it may touch close to 130 also. That's the highest form of land grab that we have reached. Now the era is going to change. 25 years is a time. In umpire parlance, it's only 50 years in which era changes to the next one, if the umpire survives for that long. And you can search it all, and you can do Google to figure it out. In my view, for industries, 25 years, land grab will slowly consolidate now, and the next phase of the development starts coming in. Should we catch that phase? Should we build it together? Should we be known as an industry which contributed to building an amazing India, an India which is a force to reckon with in the world in all departments? Thank you so much for your time and attention.
Thank you very much, sir, for your very inspiring address as India charts its journey towards global leadership. Your call for making trust and transparency and excellency as our benchmark definitely inspires everyone here in the August gathering. Thank you very much, sir. And may I now request our next eminent speaker, Shri Hitesh Ramesh Chandra Joshi ji, to kindly address the gathering.
Industry leaders, distinguished delegates, members of the broking fraternity, colleagues, friends, ladies and gentlemen. So very glad to be here among all of you and participating in this event, which is a milestone for the broking fraternity, and also so very happy to be able to share my thoughts with you. It is also an occasion to recognize the efforts, the sacrifices and contribution made by the earlier members, earlier office bearers and leadership of the association who laid the foundation, nurtured its growth and brought the association to the stature it enjoys today. My tribute to their immense role and contribution. For a quarter of a century, this organization has been a beacon of support, collaboration, and professional growth for the insurance broking fraternity. I would like to commend you for the choice of tagline, trust, growth, and togetherness. It says a lot. This discussion has, particularly in Mr. Seth's speech, he emphasized trust a great deal. Trust is at the very center of the financial sector. That is the most important value that our industry inspires and strives to promote. Trust is at the core of the insurance industry offering and cannot be overemphasized. Growth, again, as pointed out by Honorable MP Dr. Satish Punia, there is a journey to be made towards the national goal of insurance for all by 2047, and this burden is essentially on the shoulders of the distribution channel, and particularly the broking fraternity. Togetherness again emphasizes that we are all in it together, we all need to work together, and it requires a joint and concerted effort for the larger goals that we all aim to achieve. Insurance for all by 2047 is an ambitious goal with various dimensions. There are dimensions of product design, of affordability, of sourcing capital, of claim servicing, and quite possibly, the most importantly, the sales and distribution. Since it is a recognized reality that insurance is sold and not bought, the last dimension demands greater efforts, higher challenge, and greater innovation. It is broking community which promotes innovation, spurs product design, and matches demand and supply. This is true on the insurance side as well as on the reinsurance side. The contribution of the fraternity on the reinsurance side deserves a particular mention. It can be argued that insurance and reinsurance broking business has undergone more evolution and transformation in last half a century than the evolution and transformation witnessed by the business models of the risk carriers. This speaks volumes for its innovation and resilience, enduring impact and sustained relevance, reminding us that true success lies not only in what we achieve, but how we adapt and grow. The challenges before the fraternity are also the challenges before the entire risk management industry. A dynamic interplay of regulatory shifts, technological advances, and changing client expectations. The evolution from transactional intermediary to strategic risk partners, leveraging data, digital tools, and specialty expertise. The most important challenge quite possibly comes in the form of challenges to the very business model, particularly disintermediation trends across industries and also in the retail insurance. Of course, the advisory depth and client-centric innovation should assist the profession to navigate the challenges quite effectively. The question can be if the answer to the challenge is to be found in scale or in niche. Possibly it is both. As is applicable to most sectors of the economy, there is a need to fire on all cylinders. Whether it is cost reduction, quality service, innovation, special value proposition, and of course, agility. This was amply highlighted by Mr. Ajay Seth when he raised issues about conflict of interest and the cost of intermediation. In an era of climate change, cyber threats, economic volatility, geopolitical upheavals, and upcoming green economy and new generation of risks, the role of skilled intermediaries will remain relevant. Your continued evolution and broadening of your presence across the value chain from mere distribution to trusted advisors to comprehensive risk solution provider to holistic risk partners will define the next chapter of insurance sector's journey in India and beyond. As we look ahead, I am sure the association will continue to embrace the same spirit of innovation and service that has defined it for 25 years. The challenges of tomorrow will demand fresh ideas and renewed energy, and I am confident that the association will continue to rise to the occasion. Let me highlight that for us reinsurers, broker is the exclusive distribution channel, and this is so globally. It is quite remarkable that some of the larger brokers have immensely contributed to the risk management industry, promoted understanding of risk, contributed to modeling, actuarial techniques, so much so that they also train risk carriers and underwriters. We as risk carriers and business associate share celebration of this milestone of yours, and we recognize the contribution that you have made to the industry, to the economy at large, towards addressing the emerging risks and national goals. Let me highlight here that global resilience today depends on the risk management industry, and intermediaries have a pivotal role to play here. Congratulations to all of you on this remarkable achievement. Here is to the next 25 years of success and service. Yesterday, Honorable MP Dr. Punia ji aptly put it, "Sitaro ke aage jahan aur bhi hai." I think this sentiment was more than adequately amplified by Mr. Ajay Seth when he said, "मंजिलें और भी है, मंजिलें दूर भी है." ये जो शेर है, सितारों के आगे जहां और भी है, वो शेर है मोहम्मद इकबाल साहब का, उन्हीं का एक और शेर है, उका भी रूह जब बेदार होती है जवानों में, उकाबी रूह जब बेदार होती है जवानों में, नजर आती है उनको अपनी मंजिल आसमानों में. Once the noble spirit awakens, ordinary goals don't suffice. In the same lahza, to echo the sentiment, to accentuate the message, and underscore the journey that is before us for the next 25 years, for insurance for all, till 2047, I would like to say, सितारों के आगे भी उम्मीद की रवानी बाकी है. हर सीमा के पार भी मन की कहानी बाकी है. जो देखा है अब तक वो तो इब्तिदा सी लगती है. Whatever we have seen is just the beginning. इब्तिदा is beginning. सितारों से आगे भी एक बेनिशा दुनिया सी लगती है. There is a world, or even world is not right word. It is beyond the stars, which is the uncharted territory. सितारों के पार भी ख्वाबों का जहां बाकी है. सितारों के पार भी ख्वाबों का जहां बाकी है. फलक के बाद भी उम्मीद का इम्तिहान बाकी है. I think this sentiment expresses the hope, the challenge, the aspiration, and the optimism that we all can share. And ultimately, we are all partners in this journey. Thank you so very much.
Thank you very much, sir, for your very inspiring, optimistic message and reminding us that the true success lies not just in what we achieve, but also how we grow. And trust being the cornerstone of insurance, growth our shared aspiration, and then adaptation and further innovation and togetherness, the path towards achieving the vision of insurance for all by 2047. और असीम संभावनाओं को टटोलना अभी भी बाकी है. So there is much to do and much to contribute. Thank you for inspiring everyone. And now invite our next speaker, Shrimati Girija Subramanian, the Chairman cum Managing Director of New India Assurance Limited.
So good morning, everyone, and all the distinguished representatives of government, the regulator, insurance industry, esteemed delegates, office bearers, and members of the Insurance Brokers Association of India, ladies and gentlemen. A very good morning, and heartiest congratulations on this eventful milestone of completing 25 years. It's a Silver Jubilee celebration, and it's really eventful. Happy to be able to share this occasion with all of you. 25 years is a very important milestone, time to celebrate contribution of insurance brokers to the development of India's insurance market, generating more than 40% of the non-life premium in India. My sincere and deep appreciation and congratulations to the IBAI for all the past and present members to have created this kind of a strong institution for the stupendous contribution to the growth of the non-life industry in India. Whilst we celebrate this eventful milestone, we also need to reflect on what should be the broking profession be contributing during the next 25 years. So India's economy is expanding. Businesses are becoming more sophisticated and risks are becoming increasingly complex and interconnected. In such an environment, the need for professional and responsible insurance advisories has never been greater. So we have heard both the chairman of IRDAI and the IFSCA on the sterling work being done in the regulatory institutions and authorities to make ease of doing business a reality. The government's direction for the insurance sector is very clear. Greater insurance penetration, better affordability, stronger policyholder protection, greater insurance awareness, and insurance for all by 2047. Recent reforms seek to bring in more investment, technology, and capacity into the sector. They also seek to make it easier for intermediaries to operate, strengthen reinsurance capacity, and promote policyholder education. These reforms create significant opportunities for the broking profession. With all these greater opportunities, however, comes greater responsibility. As the system makes it easier for intermediaries to conduct business, the broking profession must make it easier for every citizen and enterprise to understand risk, obtain suitable protections, and receive dependable support when a loss occurs. I believe 5 priorities deserve particular attention in this regard. The first one, closing protection gaps. Brokers today work across manufacturing, infrastructure, healthcare, aviation, marine, energy, technology, and several such specialized sectors. This gives the profession extensive knowledge of the risks confronting Indian businesses, and this expertise is used to serve clients' interests very admirably. However, much of this expertise continues to be concentrated among large corporate clients. If we are serious about insurance for all by 2047, professional risk advisories must also reach MSMEs, which are the backbone of the economy, and smaller enterprises, emerging businesses across India. A small manufacturer, trader, transporter, hospital, or technology enterprise may not have a dedicated risk management team. Yet, a single fire, flood, cyber incident, machinery breakdown, or a liability claim could threaten an enterprise's existence built through years of effort. A broker can bridge this capability gap by identifying exposures, recommending preventive measures, and arranging suitable protection. Protecting an MSME does not merely protect a policyholder, it protects employment, entrepreneurship, supply chains, and the local economy. The second priority is advisory must remain the broker's core value. A client may understand the business extremely well, but may not possess the information or technical expertise or updation required to evaluate every insurance solution available in the market. So the client may not know what risks need to be insured, what coverages are available, what limits and deductibles are appropriate for his business, which exclusions could materially impact a claim, and which combination of covers would provide the best fit for his business. So this is where a broker's advisory role becomes indispensable. The role of a broker cannot be limited to obtaining quotations and presenting the lowest price. The broker must assess the risk, compare the available protection, and clearly explain the implications of each option. The central question should not simply be which insurer is offering the lowest premium. It should be what protection does his client really require, and will the policy respond as expected when a loss occurs. The quality of broking must therefore be measured by the suitability of the advice provided, not merely by number of quotations obtained or the business placed, but by the quality of the advice. So the third priority, the pricing must be fair, realistic, and sustainable. 27% dip in fire premiums this quarter, the same with GMC, is a big warning signal. Brokers also have an important responsibility towards long-term stability of the insurance market. Competition is essential. It promotes efficiency and provides customers with better choices. But competition should not become a yearly race towards a premium that is disconnected from the underlying risk. This unrealistically low premium may appear attractive to the client in the short term, but it can later result in a reduced capacity, tighter conditions, or a sudden and severe correction at renewal. Clients should not be subjected to repeated cycles of very low premiums followed by unexpected premium hikes. Such volatility does not serve the client. It does not serve the insurer, and in the long run, it weakens confidence in the insurance market. The broker must therefore realize the great responsibility on his shoulders, must balance affordability for the client with sustainability for the insurer. The objective should be a fair premium, stable capacity, and dependable protection, not merely the lowest price for 1 year. That is the difference between completing an annual transaction and building a sustainable insurance program. The fourth priority, responsibility, must continue through the claim. So the true value of insurance is experienced not when a policy is issued, but when there is a claim. The broker's responsibility must therefore continue throughout the life of a policy. Before placement, the client must be clearly informed of the coverages available, conditions, exclusions, and documentation requirements. After a loss, the broker must help the client present the claim properly, coordinate with the insurer and other stakeholders, and facilitate a fair and timely settlement of the loss. The objective must be to ensure that the client receives the full and legitimate recovery available under the policy. At the same time, expectations must be managed honestly. A broker adds value not by promising that every loss will be paid, but by ensuring that the risk was correctly understood, the policy was properly designed, the coverage was clearly explained, and the claim was fairly presented. Policyholder trust is created or lost during a claim, and the broker is central to this. The fifth pillar is that remuneration must be matched by visible value. Professional advice, market knowledge, placement expertise, and claims support deserve fair remuneration. But remuneration must also be accompanied by accountability. For the fees or remuneration charged, the client must receive visible and measurable value, a better understanding of risk, suitable and adequate coverage, fair and sustainable pricing, continuity of capacity, and dependable support during claims. The future of broking will not be secured merely by increasing premium volumes. It will be secured by consistently demonstrating value to the client, to the insurer, and to the insurance ecosystem. Reinsurance brokers carry an equally important responsibility. They provide insurers with access to global capacity, specialist expertise, and solutions for catastrophic, complex, and emerging risks. Reinsurance arrangements must therefore be designed not merely to obtain attractive terms at the time of placement, but to provide dependable protection and effective recovery when a major loss occurs. All meaningful coverage options must be transparently presented. Domestic insurers and reinsurers must also receive a fair opportunity to participate on fair and transparent terms wherever the required capacity and expertise is available. The purpose of reinsurance broking must ultimately be to strengthen the insurer's ability to honor its promise to the policyholder. It must bring the best global capacity to India while also supporting the development of a strong domestic capability. As IBAI begins its next 25 years, its progress should be measured not only by premiums placed or policies issued. It should also be measured by protection gaps that were closed, the MSMEs protected from unexpected shocks, the clients who received informed and suitable advice, the sustainable capacity created for difficult risks, the claims resolved fairly, the trust created within policyholders. These should become the true measures of progress for the broking profession. India's journey towards insurance for all by 2047 will require insurers, brokers, reinsurers, the regulator, and the government to work together. Brokers occupy a particularly important position because they connect the needs of the customer with the capabilities of the insurance market. Let the next chapter of IBAI be remembered as a period when brokers moved beyond placement and became trusted advisors to clients, responsible partners to insurers, dependable facilitators during claims, and committed contributors to a more resilient India. When risks are properly understood, decisions become better. When enterprises are adequately protected, investment becomes more easy, more confident, and when claims are resolved fairly, public trust in insurance becomes stronger. I congratulate the IBAI and all its office bearers, past and present, and all its members on completing a momentous 25 years of distinguished service. May its next 25 years be defined by professional advice, sustainable practices, measurable value, and an unwavering commitment to the policyholder. Thank you, Jai Hind.
Thank you very much, ma'am, by elucidating 5 key priorities to focus on, providing everyone a clear roadmap for the broking community as they collaborate and align their purpose with the national vision of insurance for all by 2047. Thank you, ma'am. And to thank and express our gratitude and appreciation to the 3 stalwarts here, I would like to invite the 2 torchbearers of IBI to please join us here in presenting the mementos. May I request the President IBI and the Vice President IBI, Shri Narendra Bharindwal ji, and the Vice President Shri Kishan Agarwal ji, to kindly present the mementos. Thanking Dr. Tapan Singhel. A heartfelt gratitude appreciation to Shri Hitesh Ramesh Chandra Joshi ji. And thanking Shrimati Girija Subramanian. Ladies and gentlemen, we'll continue with the next session, and that session is going to be for 45 minutes, and post that we are going to be breaking for lunch. And for it stands as a very important session, the CEO's Roundtable, General Insurance Industry Leaders Discussion. And in this session, with the leaders, we are going to be viewing the journey so far for general insurance, the current scenario, the way forward to achieve the desired penetration, the role and importance of brokers in protecting policyholders' interest and insurance penetration. I invite our, can I just request for the stage to be set for the speakers? Yeah. I invite our moderator, Shrimati Rashmi Iyer, Director IBI. Our panelists for the session, Shri Bhupesh Sushil Rahul, the Chairman and Managing Director, United India Insurance Company Limited, who leads one of India's leading public sector general insurers, driving its commitment to customer trust, operational excellence, and inclusive insurance growth. Shri Sanjay Joshi, the Chairman cum Managing Director of Oriental Insurance Company Limited, A seasoned insurance professional, he leads the Oriental Insurance Company with a very strong focus on operational excellence, innovation, and expanding insurance access across the country. Shri Rakesh Jain, the CEO of Indus In General Insurance, a veteran of the insurance sector with over 3 decades of experience. He's leading Indus In General Insurance with the vision to build a technology-driven and a customer-first insurer. And also joining us in this session will be Shri Amit Ganorkar, the Managing Director and CEO of Tata AIG General Insurance, who's driving Tata AIG's growth through innovation, digital excellence, and customer-centric risk solutions. All the sessions, ladies and gentlemen, since morning we've been having more of a way forward sessions, charting the next phase of growth for the insurance sector, and our leaders of the industry with the experience and expertise which they bring, guiding us, leading us. 2:30, ladies and gentlemen, we are going to be breaking for lunch. Slightly delayed, but then this stands as a very important session. Request for your presence and your kind attention towards this session, please. May I request everyone to kindly take your seats.
Hello. Good afternoon, ladies and gentlemen. I know it's going to be a little tough task, but please go with us. I can assure you it will be a very lively session. Hearing the 4 CEOs, it's going to be very interesting because it's going to be extremely grounds up that how these CEOs, what they feel about us, about the future of the industry and all of that. So just give me a few moments while my other 2 panelists join. Meanwhile, I welcome Rakesh Jain, CEO of Indus Insurance Company, and Amit Ganorkar, CEO of Tata AIG General Insurance. We welcome Mr. Bhupesh Rahul, CMD United India, and Mr. Sanjay Joshi of Oriental CMD. ऐसे कैसे जाएंगे? So, let me just, I thought that let's take a moment to pause and reflect on the journey of the non-life industry in the country, which was pretty fragmented pre-independence. The market was very much fragmented with 103, 110 companies. Then came the nationalized structure in 1972 under GIC as the holding company and the 4 subsidiaries. And thereafter, the multiplayer market and the advent of IRDA in 99-2000, creation of IRDA led to a lot of private players and foreign players coming into the market. It also started an era of key reforms in the industry where, to me, a major one was the de-tariffing in 2007. And before that, the broker regulation in 2003. So the advent of formal brokers in the country started with that regulation in 2003. And what better time because of the de-tariffing era. And we have seen that in this 25, 26 years timeline, how the market has evolved. And on the stage with me, I'm so proud that we have an equal share to large public sector players and to private insurance CEOs also. So this actually is a reflection of today's insurance market in the country. But still, with all this, we still are underpenetrated with just 1% as the penetration rate in India. And we all will be talking that what's the vision of insurance for all by 2047 of these panelists. And that is going to be the topic for the thing. So my first question, I would like my co-panelists, so I'll start with you. Looking back over the past 25 years, what are the 3 most significant changes that have transformed India's general insurance industry? And what has this meant for the ordinary policyholders? So I'll have all the 4 panelists react to this, starting with you, sir, since you represent the oldest general insurance company in the country.
Yeah, thank you, and good afternoon, everybody. In fact, as we have been listening to various eminent speakers and all, and particularly we know that this particularly is the 25th year of this IBAI, and also Chairman Sir also mentioned that it is almost around equal number of years for the formation of our regulator and all. So we know that during the last 25 years, if we can break down the 25 years in, let us say, 5-year segment of 5 years each, right from 2020 onwards and all that thing. So we have several developments which have contributed to the growth and the economy, ecosystem of our insurance. So first to talk about, I think, we know that the digitization which has started, because earlier years, the only 4 public sector insurance companies had been operating for quite a long time, and the system of procurement and system of marketing and basically it was a different type of system where the companies used to have the development officers, they used to have the agents and all. And the IT systems were more or less for capturing the underwriting data and all. So, and there used to be the premium registers and all those things. So that was the phase which was going on. But after this coming in of the regulator, a lot of regulation started coming in. Regulation with respect to so many aspects, including intermediation, including your risk management, including the reinsurance and all that. So that in fact mandated all the companies to adopt the new age IT systems, and by that the reach to the customers, it started getting augmented. Earlier times, the underwriting proposal form which was coming in a hard copy, and then after a certain period of time it used to get underwritten, and maybe after that a policy was being generated and then that was being dispatched and all that thing. So this particular phase we saw the digitization of this. The second aspect was, we all know that the crop insurance, which was initially just a government scheme and which was been implemented initially by GIC and then later on by Agriculture Insurance Company. So that was also being opened up. So from 2005-06 onwards, the crop insurance was opened up for private sector also, wherein they could do the crop insurance for non-loany farmers. The weather insurance came into picture. And this particular line of business saw the growth of intermediation right up to the grassroots level. Because earlier time, this particular portfolio, it was being sort of handled by the banking system. Because whatever the bank's crop loans were given, so the insurance coverage was linked to that. But after this type of commercial insurance, the reach started right down up to the farmer level, and all the insurance stakeholders, they were required to reach out to the each and every household farmers. And now the stage has come in such a way that as of now, crop insurance has become one of the most well-spread and most well-administered scheme, wherein each and every individual insured is able to know about his all the different aspects of insurance coverage as well as insurance claim, right at a click of button. And of course, thirdly, we know that in the reinsurance segment also, initially as a PSU, we were sort of limited only to a typical type of reinsurance placements which we used to do. But over the past few years, the types of reinsurance amendments which has come, that has in fact opened up the landscape for risk protection in large part of the country.
Okay.
So these are the measures.
Thank you, sir.
Yeah.
Actually, you've taken away my question 2 and 3, which I wanted to ask separately. So basically, you are saying that it has brought in efficiency, more product basket, and also newer ways of handling the risk. So with this, I'll request Rakesh to give his vision or his, what does he feel that the last 25 years, how have they transformed the India's insurance industry, and what specifically it has meant for the ordinary policyholder?
So I think Upesh Bhai has almost mentioned most of the key ones in terms of the regulations. I'll touch maybe a few things which I think also created a very deep impact. The most important thing, if you really see for an industry, as we all know, the key product of our industry is a claim.
Yeah.
You know, and today if I see really almost 85 to 90% of the claims can be done on a cashless basis. You know, this was not possible in the earlier formats. Most of the insurances were working on you submit to us and then we'll revert to you. Now you are getting into that mindset of handling the things real time. And the real benefit of this particular approach has been the digital adoption. You know, our industry, I am very proud to say, is one of the best in terms of adoption of digital technology. And when I even look at many of the P&C companies worldwide, I feel India is far more digitized, far more organized, far more committed, you know, than many other parts of the world. And with regulator also looking at insurance, for all our regulator mandating, let's say health insurance claims, you have to approve in 1 hour. I think these are unparalleled developments from a policyholder point of view. The second big thing which I feel, and again, you know, there's a point slightly different, is like the way the FDI is coming in. You know, you are getting a global investors to come in, not just in insurance companies or reinsurance companies, even all the brokers, you know, you all can attract the best of the, you know, money, best of the talent, best of the, you know, policies from elsewhere in the world and introduce to the Indian market. So I think that is also a tremendous thing. This apart, I think de-tariffing, pricing, wordings. Now today people can construct policies on their own if they want to go by. IID is not restricting us. You know, the use and file, you know, mindset is actually percolating with the help of technology and a real time frame. I think these are tremendous things for next 25 years.
Great, thank you. Even the product pricing, we have seen as in every other sector, whether it was airlines, whether it was telecom, the opening benefited the end user. And we are seeing the same in our market as well. Mr. Sanjay, would like to hear your views, please.
I will summarize it in 4 points. First thing is that it brought competition. Competition brought innovation, then price reduction for the customers, and also lot of choices for the customers. So this was the first change. Second change is technology. Because like now Mr. Jain just said that the last 25 years has been a technological revolution. And this technology has helped us in ease of access for the policyholder, then efficiency, more efficiency, lesser turnaround times, lot of transparency, and also because of the transparency, lot of accountability. The third thing which I would like to mention is the rise of the intermediary. Initially in that public sector regime, we were directly contacting the customer, and we had huge manpower resources also. Of late, in a way, it has been totally outsourced, and the insurance companies are taking the back seat, and more intermediaries are actually facing the customer. This is good in some ways. But at the same time, insurance companies also now are finding ways, whether there are any other ways to reach the customer directly. Again, the technology will come in. And the fourth point is a very proactive regulator. So, regulator, since the formation of IRDAI, they have contributed significantly in leading the change, regulating and trying to develop also. Sometimes they were right in the beginning, but sometimes
some forward movement, some rethinking, and again, but overall, the regulator has played a very important role in developing and also regulating the market, and also a lot of pushes in all these areas, like in competition, then transparency, in technological innovations and customer service. Everywhere this regulatory nudge has helped. That is, these are the 4 points. Thank you.
Thank you, sir. And on this last point, I must add that the opening up of the insurance industry has been very, very smooth, thanks to the regulator. And we have not seen any cases of companies busting or walking out. There have been just probably 2 instances which were also handled extremely well by the regulator. And there was absolutely no inconvenience put to the policyholders. Amit, over to you, please.
Yes, so good afternoon, everyone. So if I look at, the last 25 years, 3 key milestones that I would say, the first one, somewhere around 2007, 2008, we had the first round of detariffing. And for the customer, what it did is that, for the first time, there was we had discussion on price. Right? So from a fixed price regime, I think we moved to a regime where, most of the customers had a choice. The second one I would say is around 2017, 2018, where I think we had the POSP guidelines. And for the first time, we had a tiered distribution, which was, kind of officially acknowledged by the regulator. And this led to a huge growth in distribution. Right? So the reach to the customer, and in the morning we spoke of awareness, availability and affordability. So this actually created, this was a milestone in terms of, creating availability of insurance. And the third one I would say is more recent, the last 4-5 years, when the regulator actually, we moved into a use and file kind of a regime where I think, what this has done is that the entire velocity of product innovation has really undergone a change. And the amount of innovation in terms of products and the choice that the customer has got over the last 3-4 years, I don't think the industry has seen in the last 25 years. So these are the 3 key points which I would...
Quite right. I think my panel...
Madam...
Sure, sir. It's working. It's working.
Yeah, so there were a couple of kavitas which we heard recently, and of course we know that when we are talking about last 25 years, so we also know that the premium rates are falling. So in that, I had seen some kavitas some time back. It is mentioned गिरो की अभी और गिरने की संभावनाएं पूरी है. इतना गिरो कि गुरुत्वाकर्षण बल भी शर्म के मारे गिर पड़े. अभी तो गिरने की शुरुआत है, पूरा विश्व इसको देख रहा है.
Sorry, this is a warning bell for all the underwriters and also to the fellow brokers. इसीलिए sir ने बोला है, I think, poetry. Yeah. So thank you for lightening the mood. I know it is pre-lunch, so this kind of a little chatter is good. So brokers are often described as the policyholders, advisor and advocate. From your perspective, what is the unique value brokers bring in protecting policyholders' interests compared with other distribution channels? So your views, sir, on that.
Yeah, see, I'll again come back to the ecosystem, how he had evolved. So, we know that initially the 4 PSUs were there, and then the distribution was dependent on the development officers and the agents and also. So, obviously, the reach limitation would have already been there because the numbers of the officers, these class 2 officers, they were called the development officers, and so that was definitely not to that extent. And also we know that the quantum of knowledge, the level of knowledge about various different types of products and all, and also awareness about the risk part. So during those years, particularly from the property line, we used to see that there used to be engineers. So each and every regional office, the engineer used to go there. So that for every new proposal, the engineer would be going to the prospective client. He will be just assessing the various asset base and all, and accordingly he will be calculating some tariff, and then that's how it was happening. But then what was happening, that this was appearing to be very, very tedious thing and very, very time consuming thing and all. So that's how once the brokers had evolved, and of course when the brokers started, I think quite a few of the existing insurance service officials, as well as also the retired officials, they joined this particular industry, and they help in furthering whatever domain expertise they had procured over a period of time, and that indeed helped in various clients to really have the confidence that whatever the risk coverage with the insurance company is offering, that is being offered based on what type of risk exposures each and every of these clients are there. And that is indeed a very, very remarkable thing. And we can say that last 25 years period, I don't know whether any statistics is there or not, we can find the number of employment in this particular industry, which has gone so much tremendously
Quite
high.
right. I
And
think
then
it is about 25 lakhs, so plus.
indeed, yeah, indeed.
Only in the
So that is one very, very good thing. And not only in the sphere of our commercial line of business, but even in the rural side also. So since, as I come from agriculture insurance, so definitely I'll be repeating that thing again. Over the last 1 decade or so, the rural youths, the type of employment they are getting by way of extending this crop insurance services to the farmers and bringing this risk protection to the insurance company, that also had been so tremendously high.
Thank you, sir. I think for a change, I'll go to Amit now because I want to catch him unawares. I want your reaction that what the value which the brokers bring as in comparison to the other channels in protecting the policyholders' interest.
See, I think the fundamental difference is in, whom you represent, right? So, I think agents, they're supposed to represent one insurer, whereas the broker, represents, the customer, right? So, I think one of the biggest benefits that the broker brings for the customer is a very transparent, is around transparency actually, right? So, transparency in terms of what is the best product, what is the best coverage, what is the best price, right? So I think one, in terms of transparency, two, I think, as you look at, a lot of products, right? So, some of the simpler ones, I think they are more amenable to be sold by agents. Whereas as the level of complexity of the product goes up, I think, brokers are able to do a better job at it, right? So, one is in terms of the transparency, second is in terms of the entire complexity of the product. And the third, as he was also saying, I think there are services beyond, price and product discovery, which the brokers are bringing in, right? So there is a lot of risk advisory, there is a lot of, services which are provided around, assessing the risk. So I think, as also in terms of the claims, right? So brokers also play a large role, and, they kind of, work with the clients very, very closely in case of claims, and more so in case of the more complex products and the more complex claims. So I think I would say that these are typically 3 or 4 areas where I feel that, the broker community, kind of has differentiated itself from the agent community.
Thank you. Sanjay ji, how about you?
So, again, brokers, from the insured's perspective,
yes,
they have broad choices for them, and also that knowledge base which they bring along with that. So these are the two values the brokers are bringing in for the customers. At the same time, when we talk about the insurers, again, they widen the choice to us. They rather widen the reach of the insurers.
Correct.
By taking us to different markets and different customer bases. This is one thing. Second thing is, again, knowledge is not only for the customer. A lot of market information, lot of expertise from around the world is brought to the insurers through the brokers only. We have benefited tremendously. And another thing which they have helped us in is sometimes they have helped us in easing the ease of access to the customers.
Right.
Many brokers have brought in their own technological solutions, and then through APIs we have collaborated with them. Recently, with a large broker, we had digitized the entire claim process.
Correct.
So, lot of technological values, and again, like Mr. Amit mentioned, that they are also contributing very significantly in right risk assessment and also risk mitigation. That is also happening.
Thank you. It's so heartening to hear the CEOs acknowledging the value addition which brokers bring, and the amount of transfer of technology and the work which has moved from the underwriters and for the sales channels to the brokers. And I think this is the right direction which we are going, and this is how the international markets also work, that the insurers develop and grow as the manufacturers, and the distribution job is given to the brokers. So Rakesh, your feedback on this?
So let me add what others have not added. So I personally feel we are talking about India, which is 1.4 billion people, right? And we obviously want to catch up on penetration. We want to catch up on so many things very quickly. For achieving this, you need an institutional approach. You just can't do this granularly by the old models, which are predominantly agency.
Right.
The brokers obviously have an institutional reckoning from the global paradigm. But when they came to India, frankly, they have started to build this also in the same way over here. And you see the number of broking licenses which have got issued in the last 5-7 years. That also reflects the growing confidence of the broking community or the agents community to upgrade themselves the institutional way. Alongside also came the digital thing, digital evolution. So you see also brokers going on the digital format in terms of distribution. But then digital also requires investments. If you don't have an institutional mindset, how can you really create that? So Policy Bazaars of the world, Turtle Mints of the world, they have created a different approach, but with the same institutional mindset. Luckily for the industry at large, there is an opportunity to grow. And for insurance companies, you can't really put people in every nook and corner of this country. So it's a very clear, space which has got identified. It is growing well. The credibility of brokers is extremely crucial now in a transaction. Most of the insurance companies want to work with good brokers or the people who have created that credentials in a line of business. And likewise, I'm presuming the brokers also want to work with those companies which have that understanding of the risk. The underwriters are well placed, they have the capital in place, and they can be confident in assuring their customers कि भैया आपकी risk अच्छे से है, claim से लेके हर चीज you'll be well covered. So I think it's an institutional build-up which we must understand. It's equally important for us to now grow this further if we're really looking at 2047 as insurance for all.
Thank you. That's
and Madam,
great.
I'll just
Sure, sir.
one more top up from my side. See, we are talking about that client being given a value addition by brokers and all. I have a use case where there is a type of group, a medical insurance group, which nobody wants to do insurance. So here, because obviously the group is so volatile and it has its own mechanics and all.
Okay.
So here we have a broker who acts as a sort of moderator, who acts as a policeman also, if required and all. So,
Exactly.
so this is one different side of broking as well.
Yes. Absolutely. So we become partners. We take over the role of underwriters, we share, we distribute, and yes, we actually become the groundsmen for you. And while you remain, you run the company, you develop the products, you do the pricing, you do the risk management at the macro level, and leave the micro work to the brokers. I think that's the way, and it's great to hear this. Um, as climate risks, health costs, and cyber threats intensify, how prepared is the industry to innovate and offer products that genuinely address these emerging risks for both retail as well as the corporate customers? Now, this time, sir, I'll start with Sanjay ji, because he's kind of, I want to catch him unawares. So your turn will come. Aapka chance aayega.
So, it is true, madam, that every new year brings new challenges, and then the new solutions are required. And I can say that for these particularly climate risks, then cyber risks, and all,
and the increasing health costs.
And the increasing health costs.
So that's also very, very critical.
Yes, yes. So not only there has been product innovation, there have been proactive thinking much before the actual need happens. There is always a thought process which starts, and I think we have done reasonably good, but personally I feel that a lot more needs to be done. Sometimes we are in the nascent stage only, if I admit that, like parametric, lots of companies have already started doing parametric insurance, but still the real capacity is yet to be built. The real power of the product is yet to unveil. Similarly, health as an industry, the insurers and the brokers are also collaborating in. The industry is trying to find out ways in how to actually curb the costs, and this constant spiraling of this prices has to be curbed in. So at industry level, and I am very happy that with the intervention of the regulator, even the cross-industry dialogues are also happening, so that everybody realizes this thing, that in the long run, any unsustainable thing will not run. But other than products, we also need innovation in processes, and these processes have to be streamlined, smoothened. Technology has to be brought in so that the delivery costs are controlled. So in this area, though efforts are going on, different companies are bringing in a lot of innovations. Even the insured tech firms are also doing good work. But I think the journey is long. The journey is long, but we are on the right track. But a lot more can be done.
Yeah, thank you, sir. Rakesh, how about some quick comments from you on this climate risk, health costs, cyber threats? All these threats are looming. So how are we prepared?
I really don't know, are we really prepared, to what extent we are prepared. You know, all the three areas are so difficult to quantify that, you know, it really makes me wonder whether most of us will have the ability to sustain a big event. And what worries me is if there is multiple events happening too. You know, most of us are running very frugal balance sheets. Profitability is low. We buy reinsurances on things we know. We are still looking at historical data. Hardly, you know, you can simulate as much as you would like to. You know, structurally, I think, and it happens across the world also, a large climate event does define the global models also. And the only thing which saves India today is that our penetration being low, you know, the insurable losses are low. We are about 10% or so. The global average is about 25% if a large cat event takes place. But 10 to 25 also for a country is a huge exposure. So in my view, it is better to be conscious. I hope with IFRS coming in and people defining the risks, you know, more in an anticipated way, perhaps the balance sheet strength goes up. And we all end up feeling secured about things to do.
Yes.
The other thing which bothers me is, I'm extending this thing, is basically the way we are not pricing the risk. The risks which were exposure driven, which were individual, are getting priced like a portfolio.
Quite right.
And I really don't know how do people transfer these risks in a climate scenario, or, even increased healthcare cost. How do I anticipate healthcare innovations? I can understand what hospital will charge me. Chalo le lete 20%. You will increase your cost.
New
But how will
technology,
you
new processes.
price innovations of health? And more so in an environment wherein health is a social security and you're required to guarantee the retail policies.
Yeah.
Insurance companies are guaranteeing lifelong renewals. How do you really price those lifelong renewals? These are unanswered questions. Obviously, we are in a growth economy. So growth covers a lot of these things. The moment you do underwriting year-wise, if you do slice and see the old customers, what we wrote 10 years back, 9 years back, 8 years back, you will realize there is a huge gap which comes in when the growth goes down. And this is where I feel most of the companies today need to really prepare themselves. And maybe we need to capitalize much higher, much stronger.
Absolutely, Rakesh. I think the corridor talks are started about the risk-based capital, and you actually, being a man of finance background, he goes much behind the curtain on what's happening, and I'm really glad that you brought out this point. Sir, your point. You wanted to give some reaction to this topic?
Yes, of course. Regarding health, Rakesh has explained very well. But one point I would like to add is that, see, apart from the opportunity for health and what is happening in the health ecosystem and all, we also find that, see, health when the government health had come by way of RSBY, and then many of the insurance companies, they participated in that, and they were capped premium rates, and they all had suffered losses. And over a period of time, good loss management measures started, good systems had developed and all. But then now we are finding that most of the state governments are resorting to trust mode. So that is what it is happening, that the corpus which is required to be built up by the industry for health insurance. So this particular segment, it is getting out of it.
Okay.
And then to talk about the climate change.
We are seeing one red signal on Time's Up, but
yeah. So the climate change is also so erratic. Like say we all were talking about El Nino, and El Nino will happen, and these and that. And based on El Nino, we find that particularly the crop insurance rates. But then we are finding that, you see, in the western part of the country, such a tremendous heavy rainfall is happening. Once in 100 years events are happening and all that thing.
Yeah.
So that is why I would suggest that for pricing this type of portfolios, it should be a long-term pricing. It should not happen that you are pricing just 2 months before something, because we always know the climatic condition, what is going to happen.
The unpredictability. So I'll have one closing question, and Amit, I'll start with you this time. If you had to commit to one concrete action each as CEOs to strengthen the policyholder protection and deepen insurance penetration over the next 5 to 10 years, what would that commitment be?
I think I would go with sell better, right? So I think, by saying sell better, I think we need to have more disclosures up front. I think we have, we need to have more, conversations with the customers up front. And this applies both for corporate and retail, right? Because I don't think, and we also need to have, more, a very, very detailed, for lack of better word, a proposal form, more, disclosures, details, etc., more upfront. Because I feel that, in the next couple of years, we are going to be in a position where, you will not be able to reject claims, right? So, claim rejection is not going to be something which is going to be, which is going to be easy, right? And I think, from a brand perspective, from a regulator perspective, from a customer perspective, I don't think that is something which consumers would want to, kind of look at. So I think, sell better is, something that I think we should do.
Okay, thank you. Rakesh, how about you? What will be that one commitment you'd like to make?
No, I think, I will just split between retail and corporate just to contextualize. In retail, I think we have to learn from other financial services. The biggest thing I think in our business, what even Chairman IDA mentioned, is the amount of time and energy we waste in renewals, that we are hardly able to focus on new customers. So I think just as the way mutual funds taught us that there is going to be an entry load and an exit load, there has to be that kind of a mindset. If a customer thinks next year I will not do motor insurance renewal, but a year after that I may come back, we need to really put some kind of deterrences over there for the larger good, because we do portfolio pricing there. Nothing wrong when we look at like that, and it's mandatory for people to really protect themselves. Most of the time we struggle. And on the corporate side, and I'm being maybe a bit outrageous sitting on the dais, I think the important thing is, again, we miss that when we do commercial lines insurances, the proposal form needs to be signed by the CEO of that company. You know why? Because half of them don't realize what they are not buying. At least when it reaches the desk of the right guy, he will ask the right questions. Perhaps that induces the thought process for that organization to transfer the risk wisely. And trust me, many of these things are not happening because people don't want. It's out of ignorance. Now, I was inferring this because in my mind, I was thinking in the morning, yaar, क्यों ऐसा है? See, if somebody has to set up a project, उसको लोन लेना है, वो बैंक में जो एप्लीकेशन देता है, वो CEO या बोर्ड अप्रूव करता है. ठीक है? आप पब्लिक इशू लाते हो, आप बैंकर को कौन अपॉइंट करता है? CEO बोर्ड अपॉइंट करता है. वही रिस्क जब इंश्योरेंस कंपनी ले रही है, तो कौन अप्रूव कर रहा है? पता नहीं. And we all take it. तो ये बहुत सारी जो चीजें हैं ना, स्ट्रक्चरल चीजें हैं. और जैसे मैं कभी भी पब्लिक सेक्टर के टेंडर में कोट करता हूँ, हमेशा मेरे से साइन लेके जाते हैं. मैं पूछता हूँ, यार ऐसा क्यों होता है? इससे बड़े बड़े हम कोट लेके जाते हैं. फिर मैं भी 4 चीज पूछता हूँ. So sometimes, I feel the structural shifts in our country में इंश्योरेंस जो है ना, we are slightly lagging in our thought process. And I would recommend all my fellow broking partners over sitting here कि अपने को इसको elevate करना है. The credibility of our profession needs a step change. We have done tremendously well, so we are not comparing कि past से हम कहाँ पहुँच गए. But the credibility which we want, should be no less than an investment banker, which we exist in this country.
Absolutely right. जब तक कि the insurance premium will be only considered as an expense, and the accountant thinks कि बाबा ये expense को तो कम ही करना है, otherwise my CFO will say what is this, and it has to be brought as a cost of risk management, as a balance sheet protection. You are literally outsourcing your entire risk exposure. And that structural change, I think absolutely, Rakesh, what you said, it's music to my ears. And I wish I see that day when this will happen. It has improved tremendously, let me tell you, after the entry of the private players, because back in the day, the insurance per se would be handled by the most junior person in the accounts department, who has, for lack of any other job, he or she is given, okay, look at insurance. So we are all trying as brokers also to elevate that space. And I think together, if we do that, that's going to be the best thing for the industry. Sir, what about you, sir?
Yeah, of course, I agree with Rakesh about what is happening at a corporate level and bigger customer level. But then what I am noticing that the type of popularity which life insurance is having amidst the masses is one of them is probably because they have this one type of policy called money back policy. So the customer, they relate कि भी हाँ मैं premium भर रहा हूँ इतने time से, I am getting back something.
Back to me.
So somehow we have to bring out with such products that, see, we know that whenever there is an indemnity, the surveyors, they take their own time and all that thing. So we have to build in something like a benefit type of thing, that at least if certain extent of claim is there, it should be simply given by just like that without
some
any
agreed value kind of thing.
So now that we have more and more of AI and everything, so the claim settlement should be expedited very, very fast.
Okay.
Yeah.
Thank you, sir. With this, I think we call this session. Already the time warning is up. Thank you so much to all 4 of you, and to the audience for holding on. And we all should have a nice lunch, I think. Thank you so much.
Yeah. May I request our President and Secretary to please join us in presenting the mementos, Shri Narendra Bharinwalji and Shri Nirmal Bajaj ji. Ladies and gentlemen, post this, we are going to be taking a half an hour lunch break. We are almost 1.5 hours late in our entire schedule. So half an hour of lunch break, and then we are going to be resuming this session. In fact, coming out from our industry leaders, एक तरह का एक आत्मबोध का session रहा, और further deciphering and understanding our industry and the way forward from the industry leaders and working closely with the regulators is going to be the next session. It's an interactive session with the members of IBAI and the distribution department of IRDI. We would also like to request the members who have yet not collected their mementos during the lunch break. You may collect the mementos from Studio 2. Thank you very much, Rashmi ji, and all the leaders for this excellent session. Okay. May I request our board members to please join us for a group photograph? And also the past presidents who are present with us in the audience, may I request everyone to be part of this group photograph? Ladies and gentlemen, the lunch outside in the pre-function area, 3:10 we are going to be starting with our next session. And the members who have yet not collected the mementos, requesting you to please collect your mementos from Studio 2. 3:10 पर हम अपना अगला सत्र शुरू करेंगे. Inviting you all to please join us for lunch. Ladies and gentlemen, at 3:10, there is a slight change. 3:10, we are going to be having the session on life and beyond, reaching the last mile. The life insurance session, life insurance distribution session at 3:10. because I foresee a very thin audience after lunch. So if you can be slightly moving in front. We still have 3 sessions to go. back. Welcome back to everyone. May I request you all to please settle down. Life and Beyond, Reaching the Last Mile, the session on life insurance distribution. And in fact, that touches what our speakers in the morning and especially our chief guest had mentioned, quality versus quantity. The conversation is going to be about inclusive growth, financial protection, expanding the insurance access, reaching to the people in need rather than simply increasing the policy sales. I invite our moderator, Shri Venkatesh Naidu. May I request you, sir, to please take center stage. Our panelist, Shri Anurag Gupta from Axis Max Life Insurance, who brings in extensive experience in driving business growth, distribution excellence, and customer-centric innovation in the life insurance sector. Shri Vivek N. from ICICI Prudential Life Insurance, representing one of India's leading private life insurers. He has been instrumental in strengthening the distribution strategies and delivering customer-focused insurance solutions. Shri B.C. Patnaik, Director, National Insurance Academy, a distinguished insurance professional with rich industry and leadership experience. And under his guidance, the Academy continues to nurture future-ready talent and promote excellence in insurance education, research, and leadership development.
Thank you. Thank you so much. Good morning, everyone. I'm saying good morning intentionally because we have come after a heavy lunch. Okay, so good morning will help. Hello, everyone. Okay, great. I can see a solid show of hands, so that's important. Let's not get dissuaded by the audience, guys. And we are just having a humorous discussion that many of the broking folks, unlike a few of us, are not selling life insurance. And that's something that is quite evident from the hall today. Okay. But that's an opportunity as well. And so let's not get dissuaded by the crowd. Another very interesting fact is that this time the IBAI leadership has gone ahead and decided to beam this across YouTube. So many of our broking friends are watching this entire session virtually as well. So that's the good news. Okay. Something to make up for the lesser crowd in the hall. Okay, but let's make the session very interesting. Thank you, Anurag. Thank you, Vivek. Thank you, Patnaik ji, for joining this wonderful session, Life and Beyond. So just to get started, I think on this note, life insurance, we talk about it fondly all the time. And this morning, the chairman was there, and I would gently put it that he was nudging us, actually pushing us, that insurance, don't restrict it to the classes, but let's go to the masses. Okay, let's go deeper. But it's a difficult topic. It's easier said than done. And that's something that all of us in the industry have been struggling for a long time, right? Especially in the life insurance business. But since it was difficult, I said, let us not answer it. Let us get guys like you guys, okay, to come down and answer this question. When there's less intellect on one side, we try and push it down to you to go ahead and answer these questions. So let's keep the session light. So I'll start with the first question. We can just go in this order from Anurag-ji, from you. Okay, in one word, okay, you can make it one sentence. How would you describe the current state of life insurance in India and why?
So thanks, Vanky, and I think congratulations to all of you for putting such a great show together. I think life insurance today is in a inflection point. Because if you look at the regulator, the government, they have a vision. They have a vision that by 2047, everybody in India should have a life insurance, health insurance, home insurance. So there is a vision. There is also a digital platform available today. I think there is a multi-distribution platform available for life insurance company to leverage on. But I think what is now needed is, going beyond urban markets and reaching out to tier 3 and tier 4 market. So I would say that very interesting time. And I think next 2 decades are going to be very interesting for life insurance because we are very hopeful that it's going to grow by leaps and bounds.
Okay, that's good news. We discussed this morning that a 3.6 penetration doubling like in the developed markets. So at least there's a lot of hope for all of us in the profession that there's much to look forward to. So I'll move to Vivek. The same question. How would you describe the current life insurance state?
Thanks, Venki, and very good afternoon to everybody. One thing I think one word to say is really exciting times. Reason, if I were to attribute, there's a very long runway for a life insurance company and every distributor who's associated with it. I think one thing you have to know is that penetration, as we said, I think you've discussed in the morning, is very, very low. If you look at the reports compared to if you were to look at Singapore as one of the countries which is already having a good amount of penetration, not completely, we are at least 1/3, 30% of that. So there's a long way to go. But what is good to say is that we have done a lot of effort in the recent past, over the last 10 years. PMJJBY, if you were to look at it, has helped in a big way to increase the penetration. Literally 27 crore lives of the total 80 crore lives, which is the working population, is covered in one way or the other by PMJJBY. Currently active numbers around 12.5 crores. So that's a very good effort that's been done by the government, and that's worked, especially out of which mostly around 80% is in the rural areas. That's a big positive which has worked for us. But has the work been done completely is an opportunity? Long way to go. Urban areas, problems are different. There's a good amount of penetration, but it's not about penetration there. It's more about how well are people covered for protection? Are they adequately covered? So if you look at a metric, basically each of us have life covers, right? If somebody's got 10 lakh as a life cover, he would require at least 1 crore of rupees in 10x as a life cover minimum. So like in India, if you were to measure that as a percentage of GDP, if you were to say, we are just around 0.3%. Yeah. Right? You can technically say 30%, but 0.3% is the number. So that number is very, very low. And I gave a reference of Singapore, which is one of the markets. They are sitting at 3.3x of whatever I said. So first from getting here to from India, from getting where we are to wherever we can go to, maybe in the next 10 years, get to something at least of 2x, 1x to 2x is a big runway, and it gives us a lot of opportunity as insurers, as brokers, to participate in this growth. And I'm only talking pure term.
Excellent. I think the entire discussion that we have is insured, but insured is uninsured, we talk about, but underinsured is, I think, a large pronounced problem. So Patnaikji, I'll just pick on the same question with you, but I just remember a conversation that we were having while sitting at the table, and it was very interesting. So I'll just pick it up there. You said two things. Intermediaries बहुत जरूरी है इस business के लिए, but in the same breath you said that आज के तारीख में युवा जो है, they are not looking at this insurance profession as a very respectable profession. Log, they are willing to ride bikes, go on Swiggy as gig workers, but this entire profession is becoming difficult. So ये penetration हो पाएगा? Will we be able to really deepen this penetration?
So thank you very much, Venkateshji. So first, to answer to your first question, that what is the scenario of the life insurance industry? At this point, I'll say it is satisfactory. I have reasons to be satisfied about the progress of the life insurance industry. And if you see the assets under management, out of the 80 lakh crores of the insurance industry in India today, 70 lakh crores belongs to the life insurance industry. That means somebody somewhere is doing the right thing.
Yeah.
And as Anuragji was rightly telling that, okay, everybody has got insurance, if you see. So, and I have reasons to believe that yes, it is always on the upswing and it will progress that fashion. To your other question that, okay, when we talk about intermediaries, and yes, India is a challenge. India has large number of young population and large number of jobs are created at the lower level. At a certain point of time, there was a dearth of jobs at the lower level. And the compensation that was there was not very good. But today at the lower level also, the compensation, we don't say it is very good, but still Like for a survival with dignity or riding a bike, 15, 20, 25,000 is some sort of a respectable compensation, and that is available in the country. And when we try to recruit intermediaries from the same segment, and with the gestation period for an intermediary to have a decent earning to that level, it is 1 year or 2 years. So it's a very it's a challenge to retain them. So those are the big challenges. But yes, as companies, we can invest in that gap. Like the people who are managing them, how invested they are into their profession. What is their capability? What is their commitment to the life insurance industry? Yeah. So if we can plug that gap, then they will take care of the rest.
Fantastic. I think that's a very, very good point. It's not just about saying that, लोगों को पकड़ना मुश्किल है, okay, but can you get them on board, accelerate the earnings in such a manner that they remain committed and interested in their profession? I think that takes me to my second question, the difficult part, right? And I'll come back to you, Anurag, on this question. What are the biggest barriers to improving life insurance penetration? Patnaikji started by saying people taking the profession seriously. But are there any other pronounced gaps that you see towards improving the penetration? And if you can just give a little bit of a, nuska in terms of how is it that we can solve that problem? I know that we cannot elaborate, we cannot discuss the entire solution today, but I'm sure you guys debate in the boardrooms all the time. So any quick 1 or 2, aspects that are heading towards this penetration problem solution?
Thank you. See, I think if you look at the insurance business last year, I think industry would have done close to about 9 lakh crore of premium in life insurance. But when you look at the number of policies and number of customers, they've been degrowing for the last couple of years. So I think this entire parameter of evaluating business only from the point of view of premium, I think is incorrect. We should be driven more by the number of customers we are able to bring on board and how many NOPs we are able to drive. I think NOP growth will drive the true penetration in India. I think there are a couple of things. One, I think we have, when we started privatizing industry, there was a lot of focus on identifying the gap of insurance and then doing the need-based selling to the customer. I think from there, I think we've made a mistake where there is a lot of focus on pushing the product. We've become product paddlers now. Everybody's selling a product, nobody's talking about the need of the customer. So I think there is a huge gap in the advice that people like brokers, insurance agents, banks can provide. I think that's currently missing. So that's one big barrier which is creating a bit of distrust between the customer and the insurance company and intermediaries. So I think what is needed now is that what we debate internally is that while the regulator is trying hard to come up with some very exciting platform like Bima Sugam, Bima Trinity, objective is to reach to the state level and empower tier 3, tier 4 cities through almost like Lakpati Didi concept that has revolutionized the entire Jan Dhan Yojana. So I think the debate is more around how do we efficiently reach out to tier 3 and tier 4 market and drive more NOPs through our distributor. I think that will change the game in life insurance. And I think there, if I look at one distribution platform which has been able to do the job effectively is the digital platform that life insurance companies run today. Even companies like Policy Bazaars have done a good job in terms of reaching out to tier 3 and tier 4 cities where maybe a typical traditional distribution model is finding it difficult to sustain because of the cost of the model. So I think it's a combination of technology, a combination of your distribution model, and third, how do we leverage some of the new AI tools? For instance, a large issue in insurance today, Venki, you know that you call 100 people, 50 people pick up your phone, and people who pick up your phone, only 10 people maybe talk to you nicely, and one person eventually buys. I think if we take out that hard part from the entire solicitation process, and part of it maybe if we delegate it to AI engines like humanoid calling, which are becoming very, very innovative now. You know, if I talk to humanoid calling and I say that you have to become like Venki and talk like Venki, you know, who's part North Indian and part South Indian, and talk like him, humanoid can emulate it and can do a great job there. So I think that part we can partly delegate so that we can create far higher reach and create more cost-effective models which are able to help us reach to tier 3 and tier 4 market where we can drive higher penetration.
That's a good tip for all of us, creating humanoid as an augmentation, not as a replacement to human being, but as a complementary factor to go ahead and increase your sales. Okay, not discounting for the fact that nobody picks up 1400 calls anymore. Okay, wo alag problem hai, but that's for a different day. So yeah, Vivek, over to you. What do you think we can really go about? What are the factors that are really blocking penetration and how can we solve that?
See, when we say penetration, typically it's obviously the number of lives that we cover, right? So, and there are two Indias. There's a rural India, there's an urban India. And I'll just keep it sharp. Rural India, there's a big reach we need to cover. You need simple products which will be able to reach out. I think we have done some part, but some part of innovation can happen. Look at telecom penetration. If it's a different industry, small, micro, ticket size, simple products can help. Of course, Bima Trinity is a big way. It will help us kind of expand the reach and increase penetration. That's the part that we can look at for the rural side. Coming to the urban, like Anurag was mentioning, whether it is metro, or Tier 1, Tier 2, Tier 3 cities, it's a totally different thought process. First, we have to understand, we as brokers, insurers, we believe everybody is financially literate. I think the starting point is that if you go talk to a common person, depending on the strata, they do not have any understanding of financial literacy. That's a big challenge first. Then it comes about savings and it comes about insurance and so on and so forth. That's the starting point of the problem today, and coupled with the fact that awareness is also very low. These are the in terms of barriers which are there. And a lot of education in terms of need for life health insurance. I'm not only saying life and health insurance, and insurance is very critical. So people are aware. Today, if you look at many of our Indians, they'll say pure protection is still a luxury because the income level that they look at, they don't think it's important. They would rather say this money I want to save. Then the difficult problem is I want to save for a smaller instrument or for an objective. That's a different question. So more of the urban India and different segments of society, starting from the let's say if you're the lower mass affluent, and as you move higher, the ask becomes totally different. What we usually end up talking about is the reach in terms of the metro, urban, educated, net savvy kind of India, where we are having a very good amount of understanding, where we are able to crack it. So here I'd like to break that into two parts further. What Mr. Patnaik said, that the part where the mass is involved and they are savvy, but they need physical interaction. They need brokers, advisors to reach out to them. And there are challenges of even the brokers or advisors to be educated in financial products and then communicate accurately. So that's the challenge there. And simple products will help for that segment. For the higher segment, which you look at the mass affluent and digitally savvy, there are lots of work being done. And I think many of us here would be in that segment where we would like to get to reach out to our customers, see how we can get them to move the sales funnel faster. Yes, humanoid, digital nurture programs are part of the engagement in a way that we can actually help make the life of each of us as brokers and intermediaries better to increase our productivity. Because what happens is that if you are not able to do more number of sales, it becomes very difficult. Even today, the productivity levels of most intermediaries are a challenge. And only when you're able to crack that using technology, I'm not saying, of course, humanoid is one method, there are different methods for that. And I know even in motor today, quotes are generated automatically, it's sent out well in advance, and you already know if the person is picking up a quote, opening a quote, and you already know those things. So that technology is an enabler, and to help us increase that reach. And coming back to the point again, awareness is key. Because if they're not aware, then it's just not going to go through with that. So that's critical, yeah.
Thank you, Vivek. Patnaik, I will just change the question for you. Because I'm just a little tempted. Anurag started off by saying advice zaruri hai. Okay, and Vivek ji bol rahe simplicity zaruri hai. Okay, but my question to you is to make the choice. Is advice necessary? Because on one end, we said that intermediaries have to be there because advice is necessary. On the other end, we are saying simplicity is required because logon ko apne aap kharidna chahiye. So, according to you, which path should we choose? Advice or simplicity?
It depends on the area. Suppose, as we discussed, in the metro and urban areas, it is informed customers. So there, a simple advice will not do. They will be part of the decision-making process and they will be designing their financial planning. It is not only insurance. And because it is possible and it is successful in the metros, so you find a lot of takers in the metro and urban areas. If you say it's like city of Mumbai, the number of households will be around 50 lakhs, let us say. And if you see the combined, if you combine all the policies of all the companies, it will be more than 1 crore of policies. So here, if you say household to insurance penetration is 200%. You take I'm taking the Navi Mumbai Thane area together also. And 2 crore population, if you see, it will be more than 50% penetration. So city by city, you go this essence. So it is comparable to any part of the globe. Whether it is United States, whether it is UK, whether it is Europe, it is Japan, and it is part of it. And get my point. Then it comes because rightly, then simplicity happens. When you go to the rural areas again, what happens? So the ticket size comes down. So the earning of the intermediary also comes down. So, and that at a certain point of time, that earning was enough. But today that earning is not becoming very, very attractive to many of the people because there also they get some sort of job.
Yeah.
So many of them do as a banking correspondent job. They're able to earn 10,000-15,000 of rupees. And the income is straight away. They don't have to invest. And there is a demand, pull side. Here there is a push side. So what could be, like what Vivek ji was talking about, okay, whether it can be humanoid, okay, suppose people may not be trusting human, they may not be trusting humanoids, but okay, AI led some sort of simplicity where a human can make it possible.
Yeah.
So that the customer's needs are satisfied. Again, we come to that needs analysis there also, and also the simplification part of it. So that will be bulk. Something of a product like that, okay, it can be sold in bulk. So that there is something for the intermediary. In the city areas, there is something for the intermediary. And there is a plethora of intermediaries. And plus, there is affordability also. The disposable income is a bit higher.
Got it,
people
sir.
feel the need of it. So it's a combination of the good things. And this population is 60 crores or let us say 15 crore of households. And in every household, you can find 2-3 policies sort of thing.
Yes. Yes.
But then you talk about the next, another 85 crores. But good thing is, out of that 85 crores, as chairman was telling and all the data suggests, that 90% have been lifted from the poverty line.
Yeah.
And that makes that means household of more than 20 crores. So if the number of policies will be say 3-4 crores in those areas, so there is a big chunk, big area. So how to capture that? Again, it depends on the marketing skill and marketing imagination, marketing ingenuity, and also product simplicity was. So there you cannot be investing a lot of time, and because for that you have to invest a lot of money, and you cannot invest a lot of money all the time because the business has to be profitable. Those are the things.
So I think that was a trick question, but Patnaik ji handled the answer very well. So he basically said that simplicity bhi zaruri hai और advice भी जरूरी है. Okay, लोगों को सिखाना भी जरूरी है और tool को simple बनाना भी जरूरी है. Okay, so that people in sales are able to succeed better और efficiency और बढ़ा पाए, right? We have a very exciting session on a few rapid fire questions. Okay, and that's something that we'll keep it very interesting. But before that, I'll finish the serious part first. Just a quick round robin on if we were to have this conversation in 2035, the same conversation. Okay, what is it that you think we'll be discussing about? Very, very quickly. In 2035, the same conversation, nearly 10 years from now, what do you think we'll be discussing about? If it came to life insurance penetration.
See, ideally with all the technology, with AI, with digital enablement, if we are not able to drive the penetration to 2x level, then I think we are not doing a good job. So I think 2x should be our mission.
2x in 2035.
I think 2x is good. It's a very good number. That's what I think it's important. But still, we still have a very big headroom. We'll still have to crack because the affluence would have gone up of India. It's already going up. It would have gone up significantly. Then we'll actually be talking about retirement products in a big way because aging population is going to be retiring. So you also have a younger population, a decent sized younger population. Health, kind of facilities are becoming better. So you have two opportunities there. One of protection and the other one of retirement solutions. That's what we'll be talking about. So those are more developed nations that we would become having double opportunity, right? So that's something that's going to happen.
So basically dying too young or
living too long, you will have, and with the average age moving up, but still the population of the average population will still, working population will still be good. And because of longevity, the older population also will be there. So, wo bhi baat karenge retirement ke liye.
So, Bharpur, we have a lot of potential, guys. That's the hope and light. Sir, what do you think?
So, I fully agree because if you see the pool of humans who can be drawn into insurance today, it is around 50 crores because they are the earning people. They need to take it from themselves and they can also afford for others. This pool, all statistics say, from various reliable sources, by 2035 it will be going to 100 crores. Yeah. Population may be 150, 60 crores, but it will be going to 100 crores. Many people say when jobs are not being created, jobs are going away. How do you say so? But again, the statistics, people who are well versed in statistics and they know it better, and there are ways to prove it that it will be there because India will be the fastest growing economy and that will create more of jobs. So when 100 crore people compared to 50 crore people, and suppose if you take individual policies which are 34, 35 crores, so when Anurag told that it will be double, so logically, mathematically, it can be double also. And I get my point. Then group insurance also becoming strong all throughout with all the companies. If you add the group insurance and all, then okay, health insurance from the life side, it's not so bad, but it needs to be marketed in a different way. It has got its own merits. Thereafter, again, he told very vital thing. If all the Western economies who have strong life insurance portfolio, they are backed by strong retirement portfolios and pure retirement folios, not camouflage retirement folios. Yeah. And pure retirement folio, okay, today the barrier, if you say, the regulations will automatically try to give the best to the customer. So the expenses that you have to manage is a very limited one. So there are no takers, neither from the company side, and I always advise the companies, okay, you take it, you take the bite. Yeah. And you create a separate cohort. You don't have the same sort of people because I will give a small example and the potential in the market is so huge, the average ticket size may be ₹1 lakh. Even if it is capped at 7.5%, so it will be something good for the market here. But I talk to all the companies, but they say yes to me, but going back they don't have the bite because they are marketing people like Vivekji will be the head of marketing. Will say, my people down the line, they may not be agreeable, let me go in this way. So these are challenges, and that way you can give also better returns to the customers. And we have the regulation has also provided for that you can give a 10-year guarantee for the pension and that can be reset. Because why? Because if you see, no insurer will agree that from beginning you, at the accumulation stage, you can have a guarantee sort of thing or some sort of visibility. And after the annuity, another guarantee for 30, 40 years. So, and experience has shown that many companies have gone bust in the Western countries because of this type of thing. So India, we have to be cautious. So still, to give the bite to the insurance company so that because people will ask, kitna dega, kitna milega, sort of thing like that. So in the regulation itself, it is provided that you can guarantee there can be a reset. All the actuaries agreed.
So on a lighter note, let me tell you.
That clicks, Indian market will go 5x.
Yeah, absolutely. I agree with you completely.
And that is the latent need, that is a hidden need. And any company, I say, if they take the bite, and they will be sweeping the market, any company.
So on a lighter note, I want to tell you two things. It is before the discussion gets dangerous, because you're also heading towards the path of what Chairman Saab was talking this morning. Lesser margin, better products, higher volumes, same top line in terms of earning. Okay, but on a lighter note, since you told about Vivek, let me assure you that he started pushing pension and annuity very, very big way in the last 1 year. बहुत सता रहा है.
And the real fashion.
Okay, so he has changed. Okay, so now let's go to the rapid fire, a little interesting round before we close our session. I have 1 minute, 22 seconds, 19 seconds now. So yeah, rapid fire. So let's start with Anurag, yeah? Protection or savings?
Protection.
Vivek?
Hybrid.
Sir, protection or savings?
It will be a combination, I agree.
Combination. चलो वो option नहीं था, but फिर भी. Okay, we'll cut you that slack. Okay, digital meetings or physical meetings?
Hybrid.
Digital.
Digital.
I agree, both.
Both.
Because it's a very complex thing, insurance. Only digital you can, because a lot of psychology is involved in motivating. It is like army, they say you have to motivate. You cannot motivate the army digitally.
Yeah.
And get my point. Physically. So here also it's like that.
Chaliye, a little bit of human wins.
People who know.
Let's move. Let's move to the, let's bring it from there this time. Sir, because I know what will be his answer, so that's why I'm going to you directly. AI advice or human advice?
Pardon?
Artificial intelligence advice or human advice?
Human advice.
Human advice.
AI supported human advice.
AI supported human advice.
Agree, replicate.
Same.
Humanoid first, human later.
See, I think no matter how evolved technology becomes, AI will never be able to replace human when it comes to quality of advice.
Quality of advice.
You will never take, you have to go to a doctor. You cannot go to AI only for
So there was a good analogy yesterday. You can replace the doctors, but you can't replace the nurses. Okay, I think that was a very, very good analogy.
And insurance is like a doctor's advice.
Yes, absolutely. So, quick 2-3 more points. I'll start with you this time, Vivek. Tier 2 or metro? When I say tier 2 beyond metro. Metro or non-metro?
Metro.
Metro. Sir.
See, I will be always whole of India. Insurance for all 2047. We have
Insurance
started.
for all.
So
Metro or
we cannot
non-metro?
go out of it.
Okay.
I think we've done a reasonably good job in metro. We have to retain what we've built in metro, but we now have to deeply penetrate tier 3 and tier 4.
Bharat Jao. Okay, from India to Bharat. That movement has to happen. Okay, this is a tricky one, but let's ask anyways. Young customer or experienced one?
Both.
No, every customer in every life stage needs life insurance, both living, dying too early, living long. So
protection here and
annuity later.
Retirement there. Okay, great, sir.
I'll put it differently to the audience. So I have two customers. One is 0 years age, one is 80 years age. Can we provide insurance or not?
0 years and 80 years. Insurance दे सकते हैं?
Why?
नहीं
0
बोल
years
रहे
I can give insurance, 80 years I can give a pension plan. What is that?
Yeah, both are possible.
So, you see, what is in the insurance ecosystem, what we provide, and that's a sort of insurance also, get my point, because that money goes to the nominee, who can be a 75-year-old lady, that means, and get my point. And we have sold a lot of policies like this. So, what happens is, that's a huge market. Stop there only. Suppose you take even ULIS market, that is yet to unfold also fully. And get my point. If you sell it for the 15-year, 20-year term, a person will get real benefits. But in the starting, we say you sold it. This is being sold to for 5 years. After that, you can liquidate it. And 50% of the customers don't get value out of it, and that results in customer dissatisfaction and complaints. 50% may be getting value because it's a, nobody can guarantee which product will be. Some products are doing fantastically well. In 5 years also they've given 11-12%. But that cannot be a template to show all the time. But if it runs for 10 years, 15 years, certainly it will give you 9-10% returns. Right. So if we are selling ULIPs, let us educate the customers that you take it for 20 years. And I get my
yeah.
You
Long
take
term
the,
bhi zaruri hai.
You take the maturity for 20 years. At least if you don't want to continue also, you take the maturity to 20 years.
Yeah.
So that should be the right advice. So that is why when Chairman IITA speaks about that, okay, the value of surrenders is more than the maturity. So that is some sort of stress point in the industry.
Yeah.
It should not have happened because at the right, because in the non-life sector when discussing, so we are finding that Mr. Amit Ganotkar was telling us sell better. So the time of selling, it should be sell better. So that kind of bite should be there.
आपने दुखी रग पे हाथ रख दिया सर.
So
SSV के बारे में बात
so the customer should be knowing I have the option to take it after 5 years to 7 years, 10 years. But if I don't require also, I can continue the policy, and also at some point of time I need not pay the premium also, it can continue. That should be second best option, and I get my point, not the first best option.
So I didn't have one question in my sheet, so I'll ask you since you touched the topic. Special surrender value, punishment or good thing?
I think it's good. It's good. I think a lot of customers who don't understand the product very well and they forget to exercise the right of free look, उनके लिए अच्छा option है ये.
Special surrender value अच्छा है बुरा है?
No, I think it's very good, and it will. I think we should possibly find ways to make it better. If it means that, what the regulator mentioned is that it's about optimizing, increasing efficiency, reducing cost. The more we are able to do both from the principal insurance company as well as the distributors, if we are able to kind of optimize cost, we can pass on the benefit to the customer, and then this will become better. As an industry, the whole product becomes far superior.
Yeah. Sir, closing comments. Broker भाई बैठे हुए हैं हमारे यहाँ पे और वहाँ पे जो YouTube में देख रहे हैं. That's a different lot. Okay, closing comments. 2 quick advice to the broking community. Life insurance का business कैसे बढ़ाए?
Just be closer to the customer. Because as Chairman was rightly telling that, you have to be connected to the customer for a lifetime. First, whether as an organization we have the bite or not. Then as an ecosystem, as a marketing ecosystem, we have the bite or not. Yeah. Sometimes it is also true that, okay, there will be an intermediary who may be living midway. But whether the ecosystem is able to support the customer, that, okay, I'll be having a substitute intermediary.
Yeah.
And who will be supporting for the lifetime.
Yeah.
So this sort of ecosystem, when it is there, so there will be less of dissension, a lot of some frustration among the customers, and that will only take it forward. And brokers are supposed to be representing the customer.
Yes.
So from the broker side, if the customer has come and the customer is dissatisfied, then it is that means totally appears.
Yeah.
So these are the scenarios, and that is how the industry has been built up all over the world. Because the moment we take, I know I was talking to a gynecologist, so he was to go on leave for 1 month. He told, no, I have a lot of patients and I have to take care of them. I told somebody will take care. No, the moment we sign, the moment the person comes to us with a delivery thing, so we take care till the end.
Yeah,
then the pediatric takes care for another 2-3 years. So these are our pattern. And had I got 2-3 cases, I would have done, but I've got 7-8 cases, I cannot take that risk. So you see the responsibility part of the gynecologist.
Amazing.
Get my point.
Yeah.
So
Vivek?
I think, see, one thing we talked about is the AI age, right? So right now, important to know that how we can use that as a force multiplier. That's very critical because today everybody is on AI, Claude, Chat GPT and so on and so forth. Everybody just like they were using Google, they're using this. Product comparisons, so on and so forth. So then the question is, what are you going to do? As a broker, are you going to be informed? But I can tell you the financial literacy with most of these people are very low. They look at it for product comparisons, but they also look at you to give them the right advice, need-based selling, and for you to use these tools to make your outcomes better. Whether you're going to you have to move to the next stage, because what I see as brokers, individuals, everybody who don't adapt to this new AI age will find it very difficult with other peers who are far more effective, far more efficient. And your customer is also changing because they are going to ask you very different questions than they were asking, because they'll know the basic product information, but they don't understand the nitty-gritties. So you'll have to scale up understanding the tools and use AI and other tools as a force multiplier. That's my point.
Like Chairman sir also said that technology now is the core, it's not the periphery anymore. Technology you have to adopt, there's no choice.
Yes.
Yeah, that's a big advice. Okay, Anurag, closing comments.
So I think broking plays a very important role because Patnaikji said a broker represents the customer. I think two areas where I think a broker should invest. Number one, on good data analytics. Because, if you understand your customer better, if you have better data, it will tell you what are the opportunities which you're missing out on. That's number one. Number two, I think there are still a lot of brokers who are still sitting on the fence and they are not taking a plunge in life insurance because they find it very difficult. So I think especially people who are into general insurance and health insurance, develop the muscle of cross-sell. Because the customer is a customer. If he's not buying life insurance from you, he's buying it from somewhere else. And today, if he is buying life insurance from somewhere else, there is an opportunity because all of the general insurance product offer portability. You also risk losing the entire portfolio of health in general if you don't build the muscle of life insurance in the long run.
That's very put in a very hard manner, but in the right manner. I think very well said, Anurag. Nothing less expected of you. I'll sum up by saying thank you for this wonderful interaction and affordability, awareness, access. I think that is something that was very, very well covered by the group. It's very clear life is here to stay. Life is here to grow. And the beautiful thing that you said, Patnaikji, is that hope is still alive because 35 crore to 100 crore movement. And you brought about the concept of household versus single insurance policies. So our household में 4 policy भी बेच सकते हैं. So to the broking friends out here, I think life is here to stay. So let's go out there and take support from all our insurers and do a brilliant job. Continue to grow our revenues, not necessarily by cutting commissions, but continue to grow our revenues. Thank you so much. Thank you. Thank you.
Thank you. And may I request Venkateshji to kindly present the mementos also. So though this session by default became the last session of the conference, but it spelled out all the key drivers of growth for the next 5 to 10 years. The attitude, the approach which is going to be shaping the industry. So ladies and gentlemen, that was the last session of the two-day conference, and that we come... Okay. तो जहाँ आगाज हुआ था वहाँ पर अंत भी होगा. Every beginning has an end also. But at the end, it is also necessary to thank each and every one who has been part of this journey. What you're seeing here is 2 days presentation, But behind that, there have been so many days and months. There have been so many people working behind the scenes to put it in the right frame. So I would like to call upon them here on the stage as they collectively express the words of thanks. So please join me as I invite our directors, Ms. Rashmi Iyer, who's here, Ms. Rashmi Iyer, Ms. Monisha Dosa, Mr. Hitesh Lakhani, Mr. Sanjeet Rustagi, Mr. Gurunath V, Mr. Sibi Verghese, Mr. Sameer Samdani, Mr. Abhishek Bundia, Mr. Venkatesh Naidu, and Mr. Pavanjeet Dhingra. So that's the power of collaboration, all of them coming together to be being finally the collective voice of Thanksgiving. And of course, the leadership, the torchbearers, the president, the secretary, the treasurer, and the two vice presidents.
IBAI secretary.
Okay.
IBAI secretary.
ठीक है.
For a picture.
Okay. May I request Anand, Kirti, and the entire IBI Secretariat also to please join us here on the stage. And I think in the audience, all of you can say hip hip hooray for them. They've done a good job. कोई words of thanks नहीं करने आपने? हो गया? Thank you हो गया? Expressions. These were expressions of thanks.
Thank you, everyone. Have a safe trip back home.
Okay.
And Kirti, where is Kirti?
Kirti, we were expecting words of thanks, पर कभी कहते हैं ना कि शब्द जरूरी नहीं होते कुछ एक्सप्रेस करने के लिए.
Is Kirti there? Kirti? Yeah.
Silence and expressions are more powerful than words.
I would like to express our greatest thank you for having Nick and me.
Absolutely.
And to tell you what a great asset it is to have you in the World Federation of Insurance Intermediaries. We look forward to continue and work with you, for you, and together. And thank you very much.
Look forward to seeing you in Sydney. Look forward to seeing you in Sydney. Thank you. Thank you so much.
So thank you everyone, and like the tagline of the conference, trust, growth and togetherness, this conference has actually built that. Thank you to each one of you and wishing you all a pleasant journey back home.